Okay, so we are live on YouTube now, please. So I would request the first speaker to begin. All the best, give your best, and just remember it is 1:49. Give 1, take away 49. You have certain responsibility, okay? And you have to give your best. So all the best, and please go ahead.
Good afternoon, everyone. Good afternoon, sir. So, my name is Avantika Shivaji Marwadi, and I'm going to telling you declaration and payment of dividend. So, dividend हम 3 चीजों में से डिक्लेयर कर सकते हैं. First is current year profit, second is previous year profit, and third is the amount given us from central government and state government as a funding. Dividend are 2 types. First is final dividend and second is interim dividend. Final dividend means the dividend declared in AGM, means annual general meeting, and interim dividend means dividend declared between 2 annual general meeting. One more difference in final dividend and interim dividend is that final dividend is proposed by board of director and approved by shareholders, but interim dividend is proposed by a board of director and approved by also board of director. If in case of loss, dividend can be declared, but there is one condition. The condition is that कि हम dividend declare कर सकते हैं, but percentage of declaration of dividend is less than average percentage of 3 preceding previous year of declaration of dividend. Then members जो रहते हैं shareholders, वो percentage of dividend को increase नहीं कर सकते, but वो उसको decrease कर सकते हैं. So basically जब हम डिविडेंड डिक्लेयर करते हैं तो उसको विदिन 5 days में वो जो अमाउंट रहती है डिविडेंड की वो शुड बी ट्रांसफर्ड इन scheduled bank in separate account and should be paid within 30 days of declaration of dividend to the shareholders. But in case of remains unclaimed, then 7 days within 7 days of payment of dividend, that amount should be transferred to the unpaid dividend account, and interest will be charged at the 12% in case of default in transferring. And if company fails to payment in dividend, then interest rate should be at the rate of 12% per annum. If in case of unclaimed dividend in 7 consecutive years, means if हमने dividend declare किया है but shareholders ने वो claim ही नहीं किया consecutive 7 years, then that amount means dividend plus उसने जितने shares है उसके पास उसकी amount एक investor education protested fund में transfer की जाएगी. Then dividend can be paid by cash, by check, by dividend warrant, and by electronic mode. And dividend should be paid to the registered shareholders. Means जिस दिन हम dividend pay करते हैं उस दिन जो registered shareholder होगा उसको हम वो पे कर सकते हैं. Then to his order means shareholders ने बोला है कि इसके नाम पे वो अमाउंट ट्रांसफर करनी है तो उसके नाम पे भी हम वो ट्रांसफर कर सकते हैं, एंड और टू हिज बैंकर. सो इन तीनों में से हम किसी को भी डिविडेंड अमाउंट पे कर सकते हैं. सो थैंक यू सो मच सर.
Thank you very much. Very well explained and very good. Thank you. May I call upon roll number 2 now, please?
Good afternoon, sir.
Good afternoon.
I am Shreya Shete, and my topic is Introduction to Strategic Management. Strategy is required by any company to for getting the top position in a challenging market. So like we can see in the pandemic situation, literally every industry suffered. So to increase the profit quantum or to reduce the operating losses, or like to take any decision like merger, acquisition, or like closure of business, a proper strategy is required. So we know that change is the only constant. So the businesses need to be competent, and for that they need like sound knowledge of the business policy. So like the origin of business policy can be traced back to 1911, when Harvard Business School introduced an integrative course on management aimed at the creation of general management capability among business executives. So like the concept of strategy, it is like a unified, comprehensive, and integrated plan. So unified is a unique plan. Comprehensive means properly formulated, implemented, and evaluated. And an integrated plan means that it is properly integrated at all the three levels, that is the corporate, business, and the operational level. And strategic management, we can say it is the art and science of formulating, implementing, and evaluating the decisions, and to enable the organization to achieve its objectives. So, excuse me, a strategy is considered as a long-term plan, a game plan, a comprehensive process, an analysis, planning, and implementation, and a plan adopted for survival, stability, and growth. So the overall objectives of strategic management are to create a competitive advantage, to guide the company to the changes in environment. Just 1 second, sir.
Are you feeling all right?
So sorry, I'm not feeling.
No, it's okay, no problem. Take your time.
Yeah, sorry. So the benefits are the strategic management gives a direction to the company to achieve the goals, and it helps the management to define the realistic objectives. The limitations are, it is a costly process, time consuming, and a complex process. And strategic management is also required in educational institutions so that the graduates can get good jobs in industries, and in medical institutions for diagnosis of diseases and treatment of disorders. And government also, institutions use strategic management for collection of taxpayers and utilization of money for services to the taxpayers. So thank you, sir.
Thank you very much. And I know you were not feeling well, then also you finished the things very well. Thank you very much. May I call upon the next speaker, please? Preeti Kishore, are you there, please?
Yes, sir.
Yeah,
So,
please go ahead.
So 1 minute. Hello. Hello, sir. Am I audible? Hello. Sir, am I audible?
Yes, you're audible. Please continue.
Okay, sir. Good afternoon to everyone. Good afternoon, sir.
Good afternoon.
My name is Preeti Kanade, and today's my subject is entrepreneur and entrepreneur. the term entrepreneur and entrepreneur are frequently used in the business world. Many people use these terms interchangeably because they think that both terms contain the same element, but the fact is that there exists a thin line among the two terms. Entrepreneurship and entrepreneurship are two different terms. Firstly, we understand the entrepreneur. We understand the entrepreneur. As per the definition, entrepreneur is an individual who conceive the idea for starting a new venture, take all the types of risk, not only to put the product or service into the reality, but also to make an extreme demanding one. एंटरप्रेन्योर एक पर्सन होता है जो प्रॉब्लम्स को आइडेंटिफाई करता है, और वो प्रॉब्लम्स उसकी खुद की हो सकती है या सोसाइटी की हो सकती है, और उस प्रॉब्लम्स को आइडेंटिफाई करके सॉल्व करने की कोशिश करता है. इसके लिए वो एक नया स्टार्टअप इस्टेब्लिश करता है, न्यू आइडियाज लेके आता है, न्यू कंसेप्ट लेके आता है, न्यू इनिशिएट्स के साथ अपने अपॉर्चुनिटीज को वो अच्छे से यूटिलाइज करता है. जो उसका गोल होता है वो अचीव करने के लिए वो सभी रिसोर्सेज जो उसके पास होती है, लाइक मैन, मटेरियल, मशीन, कैपिटल, सभी को कोऑर्डिनेट करता है और ऐसी तरह से अरेंज करता है कि उसका बेस्ट यूज हो सके. वो इस प्रोसेस में, उसके गोल अचीव करने के प्रोसेस में या उसके प्रॉब्लम सॉल्व करने के प्रोसेस में जो भी रिस्क एंड अनसर्टेनिटीज आती है वो खुद ही उसे सॉल्व करता है. वो सोसाइटी में एक नया प्रोडक्ट, नई सर्विस लेके वैल्यू ऐड करता है. सभी उसके प्रोडक्ट के रिलेटेड, सर्विस के रिलेटेड सभी डिसीजन वो खुद ही लेता है. वही अपने प्रॉफिट और लॉस इसके लिए वो खुद ही जिम्मेदार होता है. एंड एंटरप्रेन्योर एक ऐसा पर्सन होता है जिसकी जिद भी कामयाबी होती है और उसकी मजबूरी भी कामयाबी होती है. सक्सेसफुल होना है उसे, नॉट इमीडिएटली बट डेफिनेटली उसे सक्सेसफुल होना होता है. एंटरप्रेन्योर वो होता है जो बातें नहीं करता, करके दिखाता है. उसका विजन लॉन्ग टर्म विजन होता है. फ्यूचर में क्या होगा, कैसे होगा, उस पर वह ध्यान नहीं देता. सिर्फ जो उसने प्रॉब्लम आइडेंटिफाई की है उस प्रॉब्लम को सॉल्व करने के लिए उससे जो हो सकता है उसकी सभी स्किल्स, सभी नॉलेज उसमें अप्लाई कर देता है. उसे डिजाइन करता है, उसके ऊपर थिंकिंग करता है, रिसर्च करता है और उस प्रॉब्लम को सॉल्व करने की कोशिश करता है. नेक्स्ट इज एंटरप्रेन्योर. एंटरप्रेन्योर एक ऐसा पर्सन होता है जो कंपनी का एम्प्लॉई होता है, लेकिन वो खुद भी एक एंटरप्रेन्योर होता है. वो ऑर्गेनाइजेशन के बाउंड्रीज में रहकर अपने नए आइडियाज, इनोवेशंस करता है, लेकिन उसकी खुद की कोई एंटरप्राइज नहीं होती. वो किसी और के लिए काम करता है. वो एक एम्प्लॉय की तरह नहीं काम करता, वो एक एंटरप्रेन्योर की तरह काम करता है. वो एम्प्लॉय की तरह आत्मनिर्भर तो होता है, लेकिन वो आत्म प्रेरित भी होता है. दैट इज अ सेल्फ मोटिवेटेड भी होता है. उसका विजन शेयर विजन होता है जो वह अपने जो ऑर्गेनाइजेशन है उसके साथ शेयर करता है. एंटरप्रेन्योर होता है जो कंपनी के बाउंड्रीज में रहकर काम करता है. वो मार्केट में अपने ऑर्गेनाइजेशन को स्टेबल रहने के लिए काम करता है. जो प्रोडक्ट होते हैं, जो सर्विस होती है अपने ऑर्गेनाइजेशन की, उसे बेहतर बनाने की कोशिश करता है अपने न्यू आइडिया एंड इनोवेशन के साथ. नेक्स्ट इज द डिफरेंस बिटवीन एंटरप्रेन्योर एंड एंटरप्रेन्योर. एंटरप्रेन्योर वो होता है जो हु इज एंटरप्रेन्योर. एंटरप्रेन्योर वो होता है जो क्रैश से स्टार्टिंग करता है और अपने बलबूते पे अपने एंटरप्राइज और ऑर्गेनाइजेशन स्टार्ट करता है। एंटरप्रेन्योर वो होता है जो विद इन ऑर्गेनाइजेशन रह के बाउंड्रीज के अंदर रह के अपने काम करता है और जो अपने इनोवेशन है और जो गोल से वो कंप्लीट करता है। एंटरप्राइजेस एंटरप्रेन्योर एंटरप्राइजेस के रिसोर्सेस यूज करता है। एंटरप्रेन्योर अपने खुद के रिसोर्सेस यूज करता है, लेकिन जो एंटरप्रेन्योर होता है वो उस जिस ऑर्गेनाइजेशन में काम करता है उसके रिसोर्सेज यूज करता है। जो कैपिटल होता है वो सभी एंटरप्रेन्योर का होता है। वो खुद का कैपिटल यूज करके अपने ऑर्गेनाइजेशन को आगे बढ़ाता है और अपने गोल अचीव करता है। लेकिन जो एंटरप्रेन्योर होता है वो ऑर्गेनाइजेशन के रिसोर्सेज यूज करता है और कैपिटल भी यूज करता है। एंटरप्रेन्योर जो होता है उसकी खुद की कोई एंटरप्राइज नहीं होती। एंटरप्रेन्योर की खुद की एंटरप्राइज होती है। जो ऑर्गेनाइजेशन में जो भी रिस्क या अनसर्टेनिटी जो सब कुछ आता है, जब कोई एंटरप्रेन्योर इनोवेशन करता है तो वो खुद ही उस रिस्क एंड अनसर्टेनिटीज को बियर करता है। जो एंटरप्रेन्योर होता है वो कुछ ही अमाउंट्स में ही रिस्क बियर करता है। बाकी सब रिस्क जो होती है वो एंटरप्रेन्योर को ही या ऑर्गेनाइजेशन को ही बियर करनी होती है। फॉर एग्जांपल मिस्टर बीन एक पर्सन है जिन्हें एक नया आइडिया आया है। अगर उन्हें एक नया आइडिया है, अगर वो अपनी सब स्किल जुटा के सभी रिसोर्सेस का यूटिलाइज करके उसका उसे अच्छे से अरेंज करके कोऑर्डिनेट करके अपनी खुद की एस्टेब्लिशमेंट स्टार्ट करता है, कंपनी स्टार्ट करता है, तो उसे एंटरप्रेन्योर कहेंगे। लेकिन अगर वो अपने जो इनोवेशन से जो आइडिया है वो अगर किसी ऑर्गेनाइजेशन में रह के अपने जो है उसके साथ शेयर करेगा तो वो एंटरप्रेन्योर कहलाएगा। Nowadays it's become a trend that large corporation जो है वो विद इन ऑर्गेनाइजेशन एंटरप्रेन्योर को अपॉइंट करती है जिससे वो ऑपरेशनल एक्सेलेंस गेन ब्रिंग करती है फॉर द गेन competitive edge in the market. इन रियल एग्जांपल गूगल एक कंपनी है जो उनकी एक पॉलिसी है 20% टाइम पॉलिसी, जिसमें वो इंजीनियर को कुछ जो वर्क करते हैं उसका 20% जो टाइम है वो आउटसाइड द बिजनेस वर्क, मतलब जो उनका काम नहीं है या रिस्पॉन्सिबिलिटी है उसके बाहर जाकर वो काम कर सकते हैं या इनोवेशन कर सकते हैं। रफली वो वीक में एक दिन एम्प्लॉय या इंजीनियर को आउटसाइड उसके रिस्पॉन्सिबिलिटीज के काम करने के लिए परमिशन देती है। इसके ही आउटपुट है कि जीमेल, गूगल न्यूज एंड गूगल एडसेंस एंड ड्राइवरलेस कार जो गूगल ने इनोवेट की है वो सभी उनके ही एम्प्लॉय ने की है और वही एम्प्लॉय एंटरप्रेन्योर्स कहलाते हैं। थैंक यू सर।
Thank you very much. Very well explained. And I would request all the other participants who are coming up now, please keep the time constraint into mind. Every speaker is given 4 minutes. Okay. And secondly, you need to do one thing, my dear friends. Put on the camera when you're speaking because you're going live on the YouTube. Okay. So we have now called Ms. Kavya Chaturvedi. Are you ready? Yeah, please go ahead.
Good afternoon, everyone. My name is Kavya Chaturvedi, and today I would like to explain the topic Introduction to GST. So I will start with two very important terms in this chapter: bearing of tax, impact of tax and incidence of tax. So impact of tax means bearing of tax. The person who really bears the tax is said to have the impact of tax, and incidence of tax is paying of tax. It involves paying. The person who really pays the tax is the person who has the incidence of tax. So there are two types of taxes, the direct tax and the indirect tax. If the impact and the incidence of tax is on the same person, it is called the direct tax. And if the impact is taxed on one person and the incidence of tax is on another person, it is called as indirect taxes. In indirect taxes, we mainly have GST, Goods and Services Tax. So Goods and Services Tax was introduced on 1st July 2017. Before 1st July 2017, we had multiple taxes, and then after with effect from 1 July 2017, the concept of GST was introduced, and this problem of multiplicity of taxes was reduced. So Goods and Services Tax is mainly a tax which is a value-added tax and a consumption-based tax, which is charged by the central government and the state government on goods and services. Now, when I say it is a consumption-based tax, it means it is levied on consumption, not on sale. And when I say it is a value-added tax, it is levied on the value added in each process of production. Now, I would like to explain some constitutional provisions which are really important with the viewpoint of this chapter. First is Article 246. Article 246 says that the central government and the state government will collectively levy tax on intrastate supply of goods and services. Coming to Article 269A, which is the next important provision, it says the central government will alone have the power to levy GST on interstate supply of goods and services, and then the central government has to apportion it with the state government. Another important provision is Article 279A, which talks about the GST Council. The GST Council is basically a recommendatory body which makes recommendations regarding the GST laws to the central and the state government. Now, the GST Council constitutes of two parts: the central government part and the state government part. From the central government part, there are two bodies, which is the Union Finance Minister, who is also the chairperson of the GST Council, and the Minister of State for Revenue. Considering the state government part, according to the GST law, we consider that there are 31 states. So there are 31 finance ministers from the state government. The 31 states constitute of the 28 states which are there, plus 3 union territories, which includes Delhi, Jammu and Kashmir, and Pondicherry. Now, in the GST Council, the central government has a 1/3 share of voting right, and the state government has 2/3 share of voting right. And to pass a law, or to pass a recommendation, or to make a decision, I can say, we need 75% of majority. Now we will talk about the applicability of GST. The GST is applicable to the whole of India, including the state of Jammu and Kashmir. It includes the Indian territorial water, which extends to 12 nautical miles. Also, it includes the exclusive economic zones and continental shelf of India. And it also includes the airspace above the Indian territory. Now we will talk about the types of GST. There are 3 types. CGST, which is Central Goods and Services Tax. SGST, which is Central Goods and Services Tax. Or we can also include UTGST in this, because UTGST is the Union Territory GST Act, and IGST, which is the Interstate GST Act. So the CGS, when there is an intrastate supply of goods and services, we apply CGST and SGST, because the GST is a dual taxation system. So the central government will charge as well as the state government will charge. Now we apply central CGST plus UTGST in case we are making intrastate supply within a union territory. Now we have 8 union territories generally, but we have considered 3 union territories in the state. So there are in GST law there are 5 union territories, which includes Andaman and Nicobar Islands, Lakshadweep, Ladakh, Chandigarh, Daman and Diu, and Dadar and Nagar Haveli. Talking about the IGST, wherever there is a interstate supply of goods and services, we apply IGST. That is it from my side for today. Thank you.
Thank you very much. Very well explained. That's good. May I call upon the next speaker, please? Chirag.
Yes, sir.
Please. And please keep in mind 4 minutes, okay?
Yes, sir.
Thank you. Go ahead, please. All the best.
Good afternoon, speaker. My name is Chirag Kalandri. I am here to present the topic taxation about equity shares, which is related to section 112, 112A and 111A. We all know that under section 112, the capital assets which are other than equity shares, listed equity shares, equity share oriented fund and mutual fund are taxed at the rate of 20%. It is also known as long-term capital gain. Under section 112A, listed equity shares, not preference shares, equity share oriented fund, mutual fund are all taxed at 10% above exemption limit of rupees 1 lakh. And under section 111A, which is known as short-term capital gain tax of these listed equity shares, equity share oriented fund and mutual fund. Short-term means if they are sold in less than 1 year period, then they are taxed at the rate of 15%. One thing is kept in mind that in all the 3 sections, there is no deduction under various different chapters, 80C to 80U sections and various 7A, 8A, different chapters. But the rebate under section 87A of rupees 5 lakh is given in all the 3 sections. And here is one good minute analysis which is done, that preference shares are not included in 112A. So preference shares are always taxed under section 112 at 20%. But in section 112, there is also one second chance given by the income tax authority, that is the zero coupon bonds and the equity shares are taxed at the rate of 20% with indexation. In section 112A, there is no benefit of indexation given. But if you want to take the benefit of indexation in equity shares and zero coupon bond, then you go in section 112 and you get the indexation, but the taxation will be at the rate of 20%. If you don't want to get the benefit of indexation, then you can be taxed at the rate of 10% in the section 112. Now talking about debentures, debentures are not given the benefit of indexation, so one must go in section 112. Now again, there is also one topic. Now land. Now there are two types of land: rural land and agricultural land. Rural land and urban land. Now rural agricultural land is not taxed, which is because it is not considered as capital asset. But urban land, which comes under the municipal urban area, the whole conditions are there, is taxed in under section 112 at the rate of 20% without indexation. With indexation. And there is one new provision given in this budget about surcharge. The assets other than equity shares were previously taxed at the rate of highestly taxed at the rate of 37% in surcharge, but now they're also they also came in the under the limit of maximum taxation of 15%. Equity shares were previously taxed at maximum rate 15%, but other assets were taxed 37%. So now they are also under the limit of 15%. And now talking about how to calculate the tax under all the three sections, 112 and 111A is very simple, but under 112A, if the share, if the particular security is sold after 31st January 2018, then how to calculate the cost of acquisition? That is a little bit different. In that thing, we take three things. First, that the amount on the sale date, the value on 31st January 2018, and the cost of acquisition on 1st April 2001, if that particular asset it was purchased before that date. If not purchased, then we take the stamp duty value of 1st April 2001. Then in this we calculate the value which is less than between 31st January value and the sale date, and what value comes is compared to the value of 1st April, and the cost is highest between those two values. That is considered the cost of acquisition. And the securities transaction tax is not given as deduction in income tax, but in case of agricultural land, brokerage is added to the cost of acquisition. Now there is also one concept, cost of improvement, which is also given, but the cost of improvement is not given before 1st April 2001. Thank you, sir.
Thank you very much, my dear friend. So very well explained. So I would call now Radhika Lauti, if you're there, please. Radhika?
Yes, sir.
Yes, please go ahead.
Sir. Good afternoon, everyone. So I am here with the topic time of supply. So here GST is payable on the supply of goods and services. So and supply consists of elements like time, purchase order, dispatch of goods, delivery, and so on. So we have to decide the time where GST is payable. So now we have to determine the time of supply. So in case of goods, there is section 12 in which we have to study time of supply. So first, in case of forward charge, time of supply is determined as earlier of date of issue of invoice and last date of issue of invoice. So in case of goods, invoice is issued when goods are removed or at the time, invoice is made before or at the time of removal of goods. So, and the last date of issue of invoice is when the goods are removed from the factory. So in forward chart, time of supply is determined when earlier of date of issue of invoice and last date of issue of invoice. In reverse charge, time of supply is determined when earlier of date of receipt of goods or date of payment and 31st day from the invoice. So when the goods are received in to us, or date of payment. Date of payment means what? Book entry or debited to bank, whichever is earlier is considered as date of payment. And third is 31st day from the invoice. When the invoice is issued, from that day, 31st day, we have to consider that day. And whichever is earlier among these three, then this is time of supply in case of reverse charge. Then next, vouchers. Then in vouchers, there are two types of voucher, that is identifiable voucher and non-identifiable voucher. In identifiable vouchers, time of supply is considered when date of issue of voucher, that is when the voucher is issued to us, that is the time of supply, and GST is chargeable at that time only. Then a non-identifiable voucher, date of redemption of voucher, that means when we use that voucher, we the GST is chargeable to us. An identifiable voucher and non-identifiable voucher means what? Identifiable voucher means the voucher in which they have, example, if any food item can be purchased from that food pass, so we have to purchase only food items from that pass, that is identifiable voucher. And not identifiable means only shirt can be purchased, that a voucher of only clothes or suppose, that is non-identifiable. Then second is a residual case, where if time of supply is not possible to determine among these above subsections, then time of supply is determined as when returns are filed, then date on which such return is filed, that is the time of supply, and GST is charged. And again, in other cases where the date of payment is there, that is the time of supply. Now in case of services, section 13 is there, and in case of normal charge, there are two prospectus, that is when invoice is issued within the time of supply is earlier of invoice or receipt of payment, that is when the invoice is issued or receipt of payment, whichever is earlier, that is the time of supply, and GST is charged at that time. Then second is invoice not within time. So where their time of supply is earlier of completion or receipt of payment. That means when your service is completed or work is completed, or when the payment is received, that is your, whichever is earlier among these two, that is your time of supply. And third prospective is when both we cannot apply both of the above sections, then date on which recipient shows the receipt of service in his book. When the recipient records this transaction in his book, that is the time of supply to us. And then again, in service reverse charge case, time of supply is considered as earlier of date of payment or 61st day from the invoice. That is, date of payment means again the same, book entry or debited to bank account, whichever is earlier, that is the date of payment. And 61st day from the invoice, that is whenever the invoice is issued, 61st day from that day is considered, and whichever is earlier, that day is considered as the time of that time is considered as the time of supply, and GST is charged. Again, in service case, vouchers and residual is same, again that identifiable and non-identifiable. That is in identifiable vouchers, date of issue of voucher, and non-identifiable vouchers, date of redemption of voucher, that means when we use it. And in residual case, same again, when return is filed, the date on which return is filed, and in other cases when the payment is made, that date is considered as the time of supply. And again, in case of goods and or services, in both cases related to interest and late fees, the GST is charged when the such amount, that means when late fees or interest, that amount is received to us, that time GST is liable to that amount. So thank you, that this much only.
Thank you very much. And next speaker, please. Krishna, are you ready?
Yes, sir.
Krishna, please keep 4 minutes in mind, okay?
Oh, yes, sir.
Right, go ahead. Start.
2 minutes, sir. I want to share my screen.
Okay.
Just
So I would
just to-
request, by the time Krishna is sharing the screen, I request one of the person to be a timekeeper. Who will help me in keeping the time, please? I want one volunteer to keep the time. So who will help me to keep the time? 4 minutes.
Sir, is screen visible?
No, it's still not visible.
Sir,
Yes.
I can help you, sir.
Thank you. Please go ahead. So please see to that everyone is able to present and everyone is getting 4 minutes.
Okay, sir.
Okay, thank you.
Thank you, sir.
So rather, sir, screen share नहीं हो रही, मैं ऐसे ही चालू कर दूं?
हाँ, कर दीजिए, please go ahead.
Okay, sir. Good afternoon, everyone. Myself, Krishna Bhash Thakur. I will be explaining about SA 530, which describes audit sampling. So, as per standards on auditing 530, audit sampling means application of audit procedures to less than 100% of the population. As an example, जब हम आम की टोकरी खरीदने जाते हैं तो हम सिर्फ 1 या 2 आम को चेक करते हैं और उसके ऊपर से हम बता देते हैं कि ये पूरा कैरेट अच्छा है या नहीं. Basically that's called as sampling. So while considering there are numerous factors which we need to consider while deciding upon the extent of checking to be on sampling pen. First will be size of organization. The bigger the size of organization will be, the more checking will be required to auditor. Second is state of internal controls. If the auditor feels that internal controls are effective, the checking can be reduced. Third is tolerable error range. If tolerable auditor has decided to accept more tolerate more error, the checking will be automatically reduced to that portion. Fourth will be degree of desired confidence. If auditor wants a high level of confidence in sampling population, the more checking needs to be done on that population. If you talk about sampling risk, the sampling risk means the risk that auditor's conclusion based on a sample may be different from if entire population were subject to the same procedure. Basically, sampling risk leads to two types of erroneous conclusion. For a test of details, when auditor concludes that material misstatement does not exist, but in fact, in reality, it does. So it is an erroneous conclusion for which auditor is primarily concerned with, as it affects the effectiveness of audit and it will lead to an inappropriate opinion. Second erroneous conclusion can be that auditor concludes material misstatement does not exist. Material misstatement exists, but in reality, it does not exist. So auditor is not that much of concerned with this type of error, as it affects the efficiency of audit rather than effectiveness, and it will just lead to additional work. So in the second part, test of controls, if auditor concludes that controls are more effective, but in reality where they are not that much effective, so auditor is again primarily concerned with this type of erroneous conclusion, as it affects the effectiveness of audit and it will lead to an inappropriate opinion. In test of control, the second erroneous conclusion can be that auditor concludes that controls are less effective than they actually are. So auditor again is not much that concerned with this type of conclusion, as it will affect it will just require additional work. There are a lot of types of sampling. I will be explaining 3. Random sampling. It is a very basic type of sampling in which we use random numbers generators to generate the sampling numbers. It is the basic principle of this is that every object of the sample must be given equal chance of selection. It is an unbiased way of sampling. Second is stratified sampling, in which the whole population divided in subgroups called stratas, and every strata is considered as a completely independent population, and sample is selected from them. Third is interval or systematic sampling.
4 minutes हो गए, Krishna.
Okay. So just to
Okay,
there are two.
first. conclude करिए.
So basically there are two types of approaches in sampling: statistical, non-statistical. Statistical sampling includes probability and mathematical propositions too, while sampling and non-statistical sampling is just based on auditor's judgment. That's it.
Okay, thank you very much, my dear friend. Well done.
Thank you.
Okay, may I call the next speaker, please? Shivam, are you ready?
यस सर, यस सर.
Please go ahead.
हाँ सर, मेरी वॉइस आ रही ना क्लियर?
हाँ जी, बोलिए.
ओके, मैं प्रेजेंटेशन बनाया है तो प्रेजेंट करते हैं. सर प्रेजेंटेशन विजिबल है क्या? अभी आ रहा है, दिख रहा है? हेलो सर.
यस, दिख रहा है शिवम.
It's visible. Please go ahead.
ठीक है, एक मिनट. ओके, तो मेरा टॉपिक है अकाउंटिंग स्टैंडर्ड पे डिपेंड. तो सबसे पहले वेरी फ्रेश गुड आफ्टरनून टू एवरीवन. अभी टॉपिक की तरफ चलते हैं. AS1 डिस्क्लोजर ऑफ अकाउंटिंग पॉलिसीज. एक मिनट सर, ये मुझे दिख रहा है. तो नेक्स्ट स्क्रीन पे अपन जाएंगे तब पता चलेगा कि अकाउंटिंग स्टैंडर्ड 1 में कौन कौन से पॉइंट कवर होंगे. अभी देयर आर 5 पॉइंट्स जो कि मेनली अपन इस पे ध्यान देना चाहिए. सबसे पहले मीनिंग ऑफ अकाउंटिंग पॉलिसी, उसके बाद बेसिक रिक्वायरमेंट ऑफ अकाउंटिंग स्टैंडर्ड, उसके बाद फंडामेंटल अकाउंटिंग अजम्पशन, उसके बाद सिलेक्शन ऑफ अकाउंटिंग पॉलिसी, और लास्ट में आता है चेंजेस इन अकाउंटिंग पॉलिसी. अभी इनको थोड़ा सा डिटेल में देखेंगे. तो मीनिंग ऑफ अकाउंटिंग पॉलिसी क्या है? मेथड यूज्ड टू फॉलो रूल, प्रोटोकॉल और प्रिंसिपल. मतलब अगर एग्जांपल है इन्वेंट्री वैल्यूएशन, अपन इन्वेंट्री वैल्यूएशन करते हैं कॉस्ट और एनआरवी व्हिचएवर इज लोअर, ये हो गया है रूल. अब इस पे अभी अपन इसको कैसे, कौन से मेथड से यूज करेंगे? फिफो, वेटेड एवरेज. देन जो अपन मेथड यूज कर रहे हैं उसे कहेंगे अकाउंटिंग पॉलिसी. दैट्स इट. उसके बाद आ रहा है बेसिक रिक्वायरमेंट ऑफ अकाउंटिंग स्टैंडर्ड 1. अभी अकाउंटिंग स्टैंडर्ड 1 की बेसिक रिक्वायरमेंट क्या है? तो सबसे पहले जो पॉलिसी आप अडॉप्ट करते हो उसे डिस्क्लोज करना चाहिए. वो कहाँ डिस्क्लोज करना चाहिए? फाइनेंशियल स्टेटमेंट में. फाइनेंशियल स्टेटमेंट में कहा? नोट्स टू अकाउंट में. अगर आप अपना पॉलिसी अडॉप्ट की हुई पॉलिसी डिस्क्लोज नहीं करते हो तो फाइनेंशियल स्टेटमेंट आपने जो बनाया है उसे इनकम्प्लीट ट्रीट किया जाएगा. और इसका एक फायदा है, अगर आप फाइनेंशियल स्टेटमेंट में अपनी पॉलिसी अडॉप्ट की डिस्क्लोज की करते हो तो यूजर्स को एप्रोप्रिएट डिसीजन लेने में दिक्कत नहीं होती. उसके बाद आता है फंडामेंटल अकाउंटिंग अजम्पशन. अभी देयर आर 3 अकाउंटिंग अजम्पशन: गोइंग कंसर्न, कंसिस्टेंसी, एक्यूरेट. अभी गोइंग कंसर्न क्या है? फॉरसीएबल बिजनेस फ्यूचर. मतलब गोइंग कंसर्न मतलब एक अजम्पशन, अपन ने जो भी बिजनेस स्टार्ट किया है वो अपन ये सोच के स्टार्ट करेंगे या फिर वो पॉलिसी अडॉप्ट करेंगे कि वो बिजनेस कंटिन्यू चलते रहेगा. उसके बाद है कंसिस्टेंसी, पॉलिसी फॉलो ऑन कंसिस्टेंट बेसिस. मतलब आपने पिछले साल जो पॉलिसी फॉलो की वो इस साल भी फॉलो करनी चाहिए. और थर्ड है एक्रूअल मेथड ऑफ अकाउंटिंग. मतलब आपकी अकाउंटिंग मेथड एक्रूअल बेसिस पे है. अगर आप इन तीनों में से कौन सा भी एक अगर फॉलो नहीं करते तो आपको उसका फैक्ट डिस्क्लोज करना पड़ेगा नोट्स टू अकाउंट में. उसके बाद आता है सिलेक्शन ऑफ अकाउंटिंग पॉलिसी. जब आप अकाउंटिंग पॉलिसी सिलेक्ट करते हो तो आपको कौन सी चीजें याद रखनी चाहिए? तो सबसे पहले 3 चीजें है: सब्सटेंस ओवर लीगल फॉर्म, उसके बाद आता है मटेरियलिटी, उसके बाद आता है प्रूडेंस. तो सब्सटेंस ओवर लीगल फॉर्म मतलब क्या है? सब्सटेंस ऑफ ट्रांजैक्शन नॉट इट्स लीगल फॉर्म. मतलब आपको सच्चाई की ओर ध्यान देना चाहिए ना कि उसके लीगल फॉर्म की तरफ. उसके बाद आता है मटेरियलिटी. मटेरियलिटी मतलब क्या है? जो आपके बिजनेस में मटेरियल फैक्ट यूज होता है उसके बेसिस पे आपने पॉलिसी चॉइस करनी चाहिए. और उसके बाद आता है प्रूडेंस. प्रूडेंस मतलब क्या है कि आप जो भी पॉलिसी चूज करते हो उसे वो पॉलिसी कवर करना चाहिए. क्या कवर करना चाहिए? आपके फ्यूचर में होने वाले लॉसेस और आउटफ्लोज, ना कि प्रॉफिट्स और इनफ्लोज. उसके बाद आता है चेंज इन अकाउंटिंग पॉलिसी. अब अकाउंटिंग पॉलिसी एंटिटी कब चेंज कर सकता है? अभी यहाँ पे 3 कंडीशन है. तीनों कंडीशन से कोई भी एक कंडीशन उसने सेटिस्फाई कर ली तो वो अकाउंटिंग पॉलिसी चेंज कर सकता है. सबसे पहले अगर किसी लॉ ने उसे बताया कि अकाउंटिंग पॉलिसी चेंज करना है तो आपको अकाउंटिंग पॉलिसी चेंज कर सकते हैं. और अगर अकाउंटिंग स्टैंडर्ड की रिक्वायरमेंट फुलफिल करनी होगी तो तब भी अकाउंटिंग पॉलिसी चेंज की जा सकती है. और लास्ट, आपका प्रेजेंटेशन ऑफ फाइनेंशियल स्टेटमेंट अप्रोप्रिएट बनाने के लिए एंटिटी अपना अकाउंटिंग पॉलिसी चेंज कर सकता है. उसके बाद आता है इफेक्ट ऑफ चेंज इन पॉलिसी। अब चेंज पॉलिसी करने से क्या इफेक्ट आते, अभी अगर आपकी पॉलिसी चेंज करने से कोई मटेरियल इफेक्ट इन करंट पीरियड में आता है।
शिवम टाइम्स अप।
हाँ, ओनली 1 मिनट, लास्ट कंसेप्ट है। तो अगर अमाउंट आपको फिक्स पता है कि क्या चेंज आएगा तो अमाउंट शुड बी डिस्क्लोज होनी चाहिए, और अगर आपको अमाउंट नॉट असर्टेन है तो क्यों नहीं है कि आपको उसका फैक्ट डिस्क्लोज करना पड़ेगा, और इसका मटेरियल इफेक्ट करंट पीरियड में नहीं होगा लेकिन लेटर पीरियड में जरूर होगा। तो आपको वो इफेक्ट क्या होगा उसका फैक्ट डिस्क्लोज करना होगा करंट फाइनेंशियल स्टेटमेंट में, नोट टू अकाउंट में। उसका थैंक यू सर, दैट्स इट फ्रॉम माय साइड।
Thank you. Very well explained and very well prepared. Thank you very much. Thank you. So,
Okay.
may I call the next speaker, Mr. Ajay? Are you ready?
Yes, sir. Give me 1 second.
Yes.
Screen visible है sir?
Yes, एक second.
Yes.
Yes, it's visible. Please go ahead. Please continue. It's visible.
Okay, sir. Very good afternoon all of you. Today's my topic on GST, that is input tax credit. Eligibility and condition for taking input tax credit and other points. तो चलिए शुरू करते हैं। Section 16, subsection 1, eligibility criteria. Every person shall be registered under this act, be entitled to take credit of input tax charge on any supply of goods or services or both, which are used or intended to be used in the course of furtherance of his business. मतलब जो रजिस्टर पर्सन है उन्होंने खाली सामान लेके घर पे नहीं रखने का, उसे बिजनेस में भी यूज करना पड़ेगा, तभी उसे टैक्स क्रेडिट मिलेगा। Section 16 subclass 2, condition for availment of ITC. Subclause A, he is in the possession of tax invoice or debit note issued by a supplier registered under this act. Supplier ने recipient को tax invoice और debit note इनमें से कोई भी एक issue करना चाहिए, तभी अवेल होगा। Next, subclause B, he has received the goods or service both, मतलब उसे goods और service मिलनी चाहिए। Next, subclause C, the tax charge in respect of supply has been actually paid to the government either in cash or through utilization of input tax credit. मतलब जो हमारा सप्लायर है उसने गवर्नमेंट को अपना जीएसटी पेड कर देना चाहिए। Next, last subclause D, the registered person taking the ITC must have filed his return under section 39. एक एग्जाम्पल के साथ बताता हूँ। रिसिपिएंट ने जून 2021 में रिटर्न फाइल किया है तो उसे उस मंथ का आईटीसी मिलेगा, और जून 2021 में उसने नहीं फाइल किया तो उसे आईटीसी नहीं मिलेगा। Section 16 subclause 3, where the registered person has claimed depreciation on the tax component of the cost of capital goods and plant and machinery under the provision of Income Tax Act 1961, मतलब then the input tax credit on said tax component shall not be allowed. हमारे जो कैपिटल गुड्स है, अगर रिसिपिएंट ने उस पर डेप्रिसिएशन चार्ज कर लिया इनकम टैक्स के अंडर तो उसे आईटीसी नहीं मिलेगा। Subclause 4, time limit for availing input tax credit. It is a very simple concept. Before filing return of the month of September of the following financial year or final filing of the annual return of the relevant financial year, whichever is earlier, यही टाइम लिमिट है फॉर टैक्स अवेलमेंट के लिए. Other basic point for recipient point of view, payment for invoice to be made within in 180 days by recipient to the supplier. If recipient fails to make payment, then recipient shall be reverse the input tax credit along with the interest thereon. मतलब रिसिपिएंट ने अगर 180 डेज के अंदर पेमेंट की सेटलमेंट नहीं की सप्लायर को, तो उसे आईटीसी रिवर्स करना पड़ेगा और उसे उस पर इंटरेस्ट भी चार्ज करना पड़ेगा. थैंक यू सर.
Thank you very much, my dear friend. So may I call Ashwini now? Ashwini, are you there?
Yes, sir.
Please start.
Good afternoon, sir. My name is Ashwini Borade and my topic name is management accounting. Accounting में 3 types के accounting होते हैं: financial accounting, management accounting and cost accounting. Financial accounting is concerned with recording, classifying and summarizing in form of money transaction. फाइनेंशियल अकाउंटिंग का पर्पस क्या होता है? ताकि ऑर्गेनाइजेशन का जो प्रॉफिट लॉस है वो फाइंड आउट कर सके और ऑर्गेनाइजेशन की जो फाइनेंशियल पोजीशन है वो पता कर सके. ये पर्पस होता है फाइनेंशियल अकाउंटिंग का. और कॉस्ट अकाउंटिंग इज आल्सो फॉर्म ऑफ अकाउंटिंग जिसमें हम रिकॉर्ड करते हैं, क्लासिफाइंग एंड समराइजिंग करते हैं ऑल द कॉस्ट रिलेटेड डेटा. इसका पर्पस ये होता है ताकि हम कॉस्ट को डिटरमाइन कर सके, चाहे वो किसी प्रोडक्ट की कॉस्ट हो या फिर सर्विस की कॉस्ट हो, किसी कॉस्ट को डिटरमाइन कर सके ताकि हम कॉस्ट को कंट्रोल कर सके और कॉस्ट को रिड्यूस कर सके और फिर टॉप मैनेजमेंट को वो इंफॉर्मेशन हम प्रोवाइड करके जिसके बेसिस पर टॉप मैनेजमेंट डिसीजन लेता है. सो दिस इज अ कॉस्ट अकाउंटिंग. तो आज हम डिटेल में देखने वाले हैं मैनेजमेंट अकाउंटिंग. यानी वो मैनेजमेंट अकाउंटिंग वो फॉर्म ऑफ अकाउंटिंग है विच इज अ डिजाइन फॉर द मैनेजमेंट विच इज ऑल्सो डिजाइन फॉर अ टॉप मैनेजमेंट. ये वो अकाउंटिंग है जिसकी मदद से हम टॉप मैनेजमेंट है वो अपने फंक्शन अच्छे से परफॉर्म कर पाता है. टॉप मैनेजमेंट का काम होता है पॉलिसी बनाना, डिसीजन लेना, प्लानिंग करना. ये सब फंक्शंस मैनेजमेंट अकाउंटिंग में होते हैं. तो इसे हम और डिटेल में देखते हैं. मैनेजमेंट अकाउंटिंग वो फॉर्म ऑफ अकाउंटिंग है जिसकी मदद से बिजनेस को और इफिशिएंटली परफॉर्म किया जा सकता है. और एक और डेफिनेशन क्या है मैनेजमेंट अकाउंटिंग है? मैनेजमेट अकाउंटिंग वो अकाउंटिंग है विच हेल्प्स इन मैनेजर, जो मैनेजर की मदद करता है टू आइडेंटिफाई प्रॉब्लम्स इन ऑर्गेनाइजेशन एंड सॉल्व प्रॉब्लम्स और परफॉर्म को इवेल्युएट करने में मदद करता है. जिसमें मैनेजमेंट अकाउंटिंग इज कंसर्न विथ अकाउंटिंग इंफॉर्मेशन दैट इज यूजफुल टू मैनेजमेंट. इसका और एक इम्पोर्टेंट डेफिनेशन है जो कि गिवन बाय CIMA चार्टेड इंस्टीट्यूट ऑफ मैनेजमेंट अकाउंटिंग. इस डेफिनेशन में कहा गया है कि मैनेजमेंट अकाउंटिंग इज एन इंटीग्रल पार्ट ऑफ मैनेजमेंट जिसमें हम आइडेंटिफाई करते हैं और प्रेजेंटिंग करते हैं एंड इंटरप्रिटेट करते हैं इंफॉर्मेशन को. तो अभी हम देखते हैं फंक्शंस एंड ऑब्जेक्टिव्स ऑफ मैनेजमेंट अकाउंटिंग. तो पहला फंक्शंस ऑफ मैनेजमेंट अकाउंटिंग इज प्लानिंग, चाहे वो शॉर्ट टर्म प्लानिंग हो और लॉन्ग टर्म प्लानिंग हो फॉर द फ्यूचर बिजनेस एक्टिविटी ऑफ बिजनेस. तो प्लानिंग इज द मोस्ट इम्पोर्टेंट फॉर द मैनेजमेंट अकाउंटिंग. देन सेकेंड वन इज कोऑर्डिनेटिंग. जो मैनेजमेंट अकाउंटिंग है वो हेल्प करता है इन कोऑर्डिनेटिंग द वेरियस बिजनेस एक्टिविटी. एंड थर्ड वन इज कंट्रोलिंग. ये जो मैनेजमेंट अकाउंटिंग है ऑर्गेनाइजेशन की परफॉर्मेंस को कंट्रोल करने में हेल्प करता है. And then fourth one function of management accounting is communication. In communication management account system में हम prepare करते हैं रिपोर्ट और ये जो रिपोर्ट है हम प्रेजेंट करते हैं वेरियस लेवल ऑफ मैनेजमेंट. और इस रिपोर्ट में जो परफॉर्मेंस है वो पूरी ऑर्गेनाइजेशन के डिफरेंट डिपार्टमेंट डिफरेंट सेक्शन को की परफॉर्मेंस है इस रिपोर्ट में शो किया जाता है. सो इट हेल्प इन कम्युनिकेटिंग. Then fifth one is financial analysis and interpretation. ये जो मैनेजमेंट अकाउंट है इसमें बहुत सारे टूल्स है जो फाइनेंशियल एनालिसिस का डेटा एनालिसिस करने में इससे कुछ कंक्लूजन ड्रॉ करना, उसका इंटरप्रिटेशन करने में हेल्प करता है. मैनेजमेंट अकाउंट में बहुत सारे टूल्स है जैसे रेशियो एनालिसिस, कैश फ्लो स्टेटमेंट, फंड फ्लो स्टेटमेंट, ट्रेंड एनालिसिस. ये कुछ टूल्स है मैनेजमेंट अकाउंट में जिसके हेल्प से किया जाता है फाइनेंशियल एनालिसिस एंड इंटरप्रिटेशन. एंड सिक्स्थ वन इज क्वालिटेटिव इंफॉर्मेशन. ये जो मैनेजमेंट अकाउंटिंग है ये वहाँ पे क्वालिटेटिव इंफॉर्मेशन या फिर तो मॉनेटरी इंफॉर्मेशन ये तो की जाती है, बट जो क्वालिटेटिव इंफॉर्मेशन है वो भी इंक्लूड की जाती है इन मैनेजमेंट अकाउंटिंग की रिपोर्ट्स में। एंड द 7 इज डिसीजन मेकिंग। डिसीजन मेकिंग तो इम्पोर्टेंट ही होता है अवर ऑर्गेनाइजेशन के लिए। किसी भी ऑर्गेनाइजेशन के सक्सेसफुल होने में सही डिसीजन का होना बहुत इंपॉर्टेंट है। अगर गलत डिसीजन ले लिया तो ऑर्गेनाइजेशन लॉन्ग टर्म में अच्छे से परफॉर्म नहीं कर पाती, तो सही डिसीजन लेना बहुत जरूरी है। तो मैनेजमेंट अकाउंट में ऐसे बहुत सारे टूल्स है जो कि हेल्प करती है डिसीजन मेकिंग में, जैसे कि मार्जिनल कॉस्टिंग, डिफरेंशियल कॉस्टिंग, ये सारे टूल्स है। So that's it, sir. This is an introduction and objective functions of management accounting. That's it, sir. And thank you so much for giving me this opportunity.
Thank you. Thank you very much. So I would like to speak to everybody now. Thank you very much, my dear friend. So now we have completed 10 speakers. How do you feel? Like, is it worth going through this one? Is it beneficial? And is it helping?
Yes, sir.
It is beneficial.
So
Yes,
is it
sir.
so is it helping you also?
Yes,
Yes,
sir.
sir.
Yes, sir. Yes, sir.
Chalo. So we'll go for the next 10 speakers now. Okay. Thank you. So may I call upon Mr. Krishna Rathi if he is there?
Yes, sir. 2 minutes sharing screen. Sir, is it visible?
Yes, it's visible. Please start. Start, please.
Yes. 2 minutes. Video. So good afternoon. I am today giving the overview of composition levy or scheme, which is governed by Section 10 of CGST Act 2017. So first we will understand the 3 terms. Aggregate turnover means the turnover earned by the entity from all over the India, except excluding the GST tax paid by it. Turnover in state or union territory. Turnover in state or union territory means if a business have many branches in different states, then वो उस एक बिजनेस एक ब्रांच उसके स्टेट में बिजनेस करके उसके स्टेट से बिजनेस करके जितना टर्नओवर कमाती है वो टर्नओवर इन स्टेट और यूनियन टेरिटरी. Turnover of taxable supply of goods or supply of services in state or union territory means कि इसमें सिर्फ इंक्लूड होता है exempt supply, nil rated supply and all taxable supplies. So why this composition scheme? So we know that a business entity not only incurs tax expenses but also incurs the compliance cost, which is sometimes higher than the tax which it is paying. So it is difficult for small businesses to pay GST. So they don't pay GST or don't pay GST or pay in fraudulent manner. So for this, government introduced the composition levy to decrease their compliance cost. When a small dealer, very small dealer becomes the small dealer, when his aggregate turnover exceeds 10 lakh or 20 lakh or 40 lakh according to the provisions, then he has to take the registration under GST. Then he either goes to the reverse charge under Section 9 if he is applicable, or he goes to the forward charge or composition scheme. Under forward charge, supplier pays the GST, and under composition scheme he can go if if he fits in the criteria. So let's see what is the criteria. So under composition scheme, the supplier do not collect the amount of tax from the recipient. We can say that he do not passes the burden of tax to the recipient. He himself pays the tax from his pocket. And composition dealer cannot take the credit of his he paid which the tax he has paid on his input supplies, cannot take the credit. The input tax for composition scheme input tax credit is block credit, and the composition dealer gives the bill of supply to the recipient and not the tax invoice, where he do not collects the tax from the recipient. He do not issues the tax invoice and only issues the bill of supply, where he has to mention that he is the composition dealer and he is not allowed to collect the tax. So there are two sections for eligible under the eligible criteria of composition levy. So let's do its comparative analysis. The sections are section 10.1 and section 10.2a. Section 10.1 covers the manufacturers service contract where food or drink is supplied for human consumption, like a restaurant, catering, maize, and all other traders. And section 10.2a covers the registered person who are not eligible for composition levy under section 10.1. So we can basically say that section 10.1 primarily covers the supply of goods. He covers restaurant, catering, service, but primarily covers the supply of goods. But how can a business survive without providing any service? So government has allowed section 10.1
Krishna, your time has ended.
Okay, 2 minutes. Marginal service, which is 10% of turnover in state or union territory in preceding financial year, or 5 lakh, whichever is higher. And under section 10.2a, he has to primarily supply of service is covered, and he can make the supply of goods, but primarily he has to make the supply of services. And in both interest, discount income, which he has earned, is excluded. So aggregate on what basis he becomes eligible for composition scheme under section 10.1, if his aggregate turnover in preceding financial year does not exceed 1.5 crore, and under section 10.2a it does not exceed 50 lakh. And in case of special category state except Assam, Himachal Pradesh, Jammu and Kashmir, if his aggregate turnover does not exceed 75 lakh, and under section 10.2a 50 lakh. So for Assam, Himachal and Jammu and Kashmir, the criteria of 75 lakh and 50 lakh is not applicable. Criteria of 1.5 crore and 50 lakh is applicable. So tax rates are under section 10.1. For manufacturers, it is 1%, where 0.5% CGST and 0.5% SGST. It is 1% of turnover in state or union territory. For food or drink, 5% of turnover in state or union territory. For traders, 1% of turnover of taxable supply of goods or supply of services in state or union territory. Under section 10.2a, the supplies are other than who are not eligible to for composition scheme under section 10.1. So the tax rate is 6% of turnover of taxable supply of services or supply of goods in state or union territory.
Please continue, my dear friend.
Okay, sir. Conditions for composition levy under section 10 to section 10.2a. So the conditions are common for both section 10.1 and section 10.2a, which are he has to supply, supplier has to make the supply of goods on which GST, he should not be involved in the supply of goods on which GST is not leviable, like alcoholic liquor for human consumption and petroleum products. He should not make supply through the electronic commerce operator who is required to collect the tax at source. He should not be the manufacturer of notified goods, which are those notified goods: aerated water, tobacco and tobacco substitutes, pan masala and edible ice and ice cream and edible ice. So he cannot become the manufacturer of notified goods, but we can say that if he is the trader of his this notified goods.
Give time to others also, my dear friend.
Okay, sir. Okay. Thank you, sir.
Thank you very much, my dear friend. I know you have taken pains to prepare, but we have to give time to others also, right?
Yes, sir.
We have to listen to other people also. Thank you very much, my dear friend. Mr. Adil, are you ready? Mr. Adil?
Yes, sir. Am I audible?
Yes, you're audible. Please continue.
Sir, okay. Hello, everyone. My topic is GST. First of all, what is tax? Tax is an statutory liability created by law. मतलब आपको ऐसा नहीं है कि कोई बोलेगा कि कुछ मुझे टैक्स दे, ऐसा कुछ नहीं है. आप अगर कोई कंडीशन सेटिस्फाई करते हो तभी आपको टैक्स देना है. देन व्हाट इज जीएसटी? गुड्स एंड सर्विसेज टैक्स. मतलब आप अगर कोई गुड्स या सर्विस परचेज कर रहे हो तो and then who is liable to pay GST? अगर आपका टर्नओवर 10 लाख, 20 लाख और 40 लाख अगर ये एक्सीड होता है during the preceding financial year, then you are liable to pay tax to the government, that is GST. इस पहले क्या होता था प्री जीएसटी के टाइम पर, फॉर एग्जांपल मैन्युफैक्चरर है, अगर वो एक पेन मैन्युफैक्चर कर रहा है तो उससे उसके ऊपर एक्साइज ड्यूटी पे करनी होती थी, बट आफ्टर एंड देन अगर वो आगे सेल करता है तो उसके ऊपर वैट पे करना होता, तो ऐसा डुअल टैक्सेशन हो जाता था. तो ऐसे गवर्नमेंट का जो था कि वन नेशन वन टैक्स, दैट इज बेनिफिशियल फॉर अस. एंड देन डेस्टिनेशन बेस्ड टैक्स. जीएसटी इज एन डेस्टिनेशन बेस्ड टैक्स. मतलब जहाँ गुड्स एंड सर्विसेज सप्लाई हो गए, जो स्टेट या जो स्टेट में सप्लाई हो गए वही स्टेट टैक्स कलेक्ट करेंगे. फॉर एग्जांपल महाराष्ट्र से चंडीगढ़ अगर जा रहे हैं तो वहाँ सीजीएसटी एंड यूटीजीएसटी नहीं बट आईजीएसटी लगेगा, वो भी चंडीगढ़ गवर्नमेंट कलेक्ट कर लेगी. देन एचएसएन कोड. हर प्रोडक्ट को एक कोड दिया हुआ है जो आइडेंटिफाई करता है, दैट इज नोन एज एचएसएन कोड. एंड इट इज कंपल्सरी ऑन एन इनवॉइस टू हैव 4 डिजिट ऑफ एचएसएन कोड. देन इनपुट टैक्स क्रेडिट. मतलब आपने कोई गुड्स परचेज किया और उसके ऊपर आप जो टैक्स पे करते हो, दैट इज द आईटीसी अवेलेबल फॉर यू व्हिच यू कैन यूज टू सेट ऑफ द लायबिलिटी अगेंस्ट any. And then IGST, you can use IGST to set off the liability first for IGST, then CGST, and after that you can use it for SGST. Second, for CGST you can use the liability for CGST and then IGST. You can't utilize the credit of CGST for SGST and vice versa. That's it, sir. Thank you.
ओके, थैंक यू. बहुत शॉर्ट कर दिया आपने.
सर मेरे पॉइंट्स में टाइम लिमिट के लिए मैं इतने ही पॉइंट्स रखा था.
ओके, ठीक है, फाइन. थैंक यू. सो मिस्टर मीर तारिक, आर यू देयर? मिस्टर मीर?
Yes, I am audible.
Yes, please go ahead.
Good afternoon, sir. Myself Arif Ali, and my today's topic is GST return. सर जीएसटी रिटर्न जो मंथली फाइल करते हैं कोई भी XYZ पार्टी, तो सर उसमें सबसे पहले R1 फाइल किया जाता है. R1 मीन्स सर खुद के सेल के डिटेल. उसके बाद सर उसमें होता है B2B बिजनेस टू बिजनेस, B2C बिजनेस टू कस्टमर, नील रेटेड सप्लायर जिसमें जीएसटी नहीं लगता. उसके बाद सर होता है अमेंडमेंट B2B इनवॉइस, जिसमें मतलब अपने B2B के बिल होते हैं, अगर अपने से कोई मिस्टेक हो जाती है तो उसको अपन करेक्ट कर सकते हैं. और सर इसकी ड्यू डेट होती है हर महीने की 11 तारीख तक. और सर इसके बाद 3B होता है, लेकिन 3B फाइल करने से पहले 2B चेक करना ज़रूरी है. तो अब आप लोग पूछेंगे 2B क्या होता है. 2B मतलब जिस पार्टी से अपन परचेस कर रहे हैं, अगर उन्होंने R1 की 11 तारीख से पहले सबमिट नहीं किया तो अपन 2B में परचेस के बिल, तो अपने 2B में परचेस के बिल शो नहीं करेंगे, तो जितने भी शो करे हुए रहेंगे उतने का ही ITC क्लेम हो सकता सर. ITC मीन्स सर परचेस सेटअप. इसके बाद सर GST R3 भी इसमें होता है कि फर्स्ट कॉलम में टैक्स ऑन आउटवर्ड एंड रिवर्स चार्जेस इन टैक्स ऑन इनवर्ड सप्लायर. सर इसके अंदर वो अमाउंट शो होती है जिससे कि अपन अपने सारे सेल डिटेल रहेंगी. सर इसके बाद इंटर स्टेट सप्लायर आता है. इसमें वो होता है जो स्टेट के बाहर से सेल है उसकी डिटेल शो होती है सर इसमें. और सर इसके बाद आता है एलिजिबल ITC. इसमें वो डिटेल शो होती है जो 2B में दिखाई देती है, जैसे कि अपना खुद का परचेस सर. इसके बाद आता है सर नील एंड नॉन GST सप्लायर. इसमें नील रेटेड परचेस की डिटेल डालना होती है. और नील रेटेड परचेस जिसपे एंड नील रेटेड परचेस मीन सर जिसपे कोई टैक्स नहीं लगता, जैसे कि सर आटा, मैदा या नमक। उसके बाद सर इंटरेस्ट एंड लेट फीस। अगर पिछले महीने का जीएसटी R3 भी 20 तारीख के बाद फाइल किया हो तो उसकी लेट फीस इस महीने लगती सर, इस महीने लगती है और ये कॉलम में शो होती है सर। इसके बाद सर नीचे 3 ऑप्शन आते हैं। उसके बाद सेव जीएसटी R3B का ऑप्शन आता है सर, उसको प्रेस करने के बाद सर प्रोसीड टू पेमेंट। उसके बाद क्रिएट चालान। उसके बाद क्रिएट चालान को प्रेस करने के बाद सर प्रोसेस टू फाइल। इसके बाद सर अपने एसएमएस या ईमेल पे ओटीपी आता सर, तो ओटीपी डालने के बाद सर आपकी रिटर्न फाइल हो जाती, ARN जनरेट हो जाता। और सर ARN मीन्स एक्नॉलेजमेंट रजिस्ट्रेशन नंबर। थैंक यू।
Okay, thank you. Very well explained.
Thank you.
So may I call Mr. Nabil Khan now? Are you ready, Nabil?
Here I am. Very good afternoon, all, and also sir. Give me just 2 seconds for sharing my screen, sir.
Please go ahead.
So my subject is corporate and other law. My topic is declaration and payment of dividend. So here meaning of dividend in section 2 subsection 35 of the Companies Act 2013, dividend is the shareholder return on their investment and capital in the company. Dividend is the part of distributable profit which has been paid out to them. In simple words, sir, ये जो है अपना डिविडेंड ये होता है डिस्ट्रीब्यूशन ऑफ प्रॉफिट एंड डिविडेंड डिक्लेयर एज अ proportion of nominal and face value of share. So here 2 dividend are there, interim dividend and final dividend. So interim dividend section 123 subsection 3 and also section 123 subsection 4 contain provision regarding interim dividend may be declared by the board of directors at any time during periods from closure of financial year till holding of the annual general meeting. And here final dividend when the dividend is declared at the annual general meeting of the company is the dividend recommended by the board of directors and approved by shareholders at the company. Interim dividend में sir it can be revoked with the consent of all shareholders and final dividend में revoke नहीं होता है. AOS के related अगर बोलूँ provision of AOS, it is declared only when the articles specially permit the declaration, and final dividend it does not require any specific provision in the articles. Next. Classification based on nature of share does not require any specific provision in the article. So दो टाइप के शेयर्स होते हैं सर अपने पास, प्रेफरेंस शेयर्स एंड इक्विटी शेयर. प्रेफरेंस शेयर्स के अंदर दो होते हैं, क्यूमुलेटिव प्रेफरेंस शेयर्स एंड नॉन क्यूमुलेटिव प्रेफरेंस शेयर्स. हियर आगे देखा जाए तो क्यूमुलेटिव प्रेफरेंस शेयर्स के अंदर full unless it is paid in full, and non-cumulative के अंदर सर no arrears of dividend in future payable. बट ऐसा होता है सर जब डिविडेंड की बात आती है तो सबसे पहले प्रायोरिटी पे हमें प्रेफरेंस शेयर्स को देना पड़ती है. देन प्रेफरेंस शेयर्स को देने के बाद जो अमाउंट बचती है वो इक्विटी शेयर्स को दी जाती है. डिविडेंड डिपेंड ऑन डिविडेंड पॉलिसी एंड द अवेलेबिलिटी ऑफ प्रॉफिट आफ्टर सेटिस्फाइंग द राइट्स ऑफ प्रेफरेंस शेयर होल्डर. Provision regarding declaration and payment of dividend. According to section 123 subsection 1, the dividend for any financial year shall be declared or paid. बात की जाए transfer to reserve, so transfer of profit to reserve for any financial year has been left to the discretion of the company. Therefore, a company is free to transfer any proportion of its profit to reserve as it may deem fit. It may also decide not to transfer any amount to reserve. मतलब कोई भी अमाउंट वो ट्रांसफर नहीं कर सकते हैं रिजर्व के अंदर. बात करते हैं डेप्रिसिएशन पे, तो नीड फॉर प्रोवाइडिंग फॉर depreciation out of profit before declaring dividend. Dividend is an apportionment from revenue profit. Therefore, dividend should never be declared out of capital. जो डिविडेंड होता है यही वजह है कि वो कैपिटल से हम ये कैपिटल से नहीं देते हैं, कैपिटलाइज रखते हैं. दिस इज ऑल्सो द रीजन फॉर prohibition on issue of shares at the discount which you studied in the topic of share capital and debentures. So here
Nabil, your time has ended.
Okay, no problem. Sure. Sorry.
Okay, fine. Thank you. Thank you very much. Please look at the speeds also with which you're delivering. Okay. So may I call the next speaker? Ms. Radha, are you there?
Yes, I am there.
Please go ahead.
Just a minute, I'm sharing my screen.
Okay.
Is it visible?
Yes, it's visible. Please continue.
Okay, just a minute. Okay, so good afternoon, everyone. This is Radha Deshpande, and I have chosen the topic as corporate level strategies from the subject strategic management. So basically, what are corporate level strategies? These are the strategies which are prepared by the top level management that determine direction of an organization, where it is headed to go, and the way in which business units wants to work together to achieve certain objectives. So there are many corporate level strategies which the business can select as per their structure and desired goals. So yes, so as per mentioned here, there are basic four corporate level strategies. First is stability strategy, second is expansion, third is retrenchment, and fourth is combination. So we'll discuss the first strategy, that is stability strategy. So as we know, business goes through four phases. First is introduction or startup phase, second is expansion or growth phase, third is maturity phase, and fourth is the declining phase. So a stability strategy basically helps to maintain the market share when the product has reached the maturity level. So stability strategy basically ensures that that the market share which the business owns is maintained throughout, then utilizing all the available resources in a very effective and efficient manner. Then the characteristics of stability strategy can be discussed as stability strategy requires very low investments, that is it does not involve more of fresh investments, and secondly the risk involved in the strategy is also less. So going next, expansion strategy. So as we discussed earlier, the business, when it is in the expansion or the growth phase, this strategy can be implemented under the expansion strategy. Yes, under the expansion or growth strategy, we can see the whole overview. There are internal and external strategies. So under internal, there is expansion through intensification and expansion through diversification. So expansion through intensification can be defined as where the business chooses such a strategy that it decides to grow internally by doing certain changes within the organization itself. So first is market penetration, wherein there is existing product in existing market. So if we take example of Lay's, which is a product of PepsiCo, if Lay's decides to do market penetration, then it will bring out the existing products within the existing market itself. Second is market development, that is existing product in a new market. So continuing the same example, if Lay's, that is PepsiCo, decides to continue the same range of products but within a new market, that is they may target a certain age criteria or maybe a certain geographical region. And third is product development, new product in existing market. Taking further the same example, Lay's may, that is PepsiCo, may try to bring in new products into the existing market itself. Then next is expansion through diversification. So basically diversification is a term where business try to go beyond its existing business so as to achieve growth. So under diversification, there are 4 types: vertical integration, horizontal integration, concentric, and conglomerate diversification. So first discussing of vertical integration, it means that the existing business tries to acquire business within its same vertical product process line itself. That is, it does not jump out of its existing product process. So under vertical, there can be backward integration and forward integration. Backward integration means the existing business tries to acquire certain business of the input providers. And forward integration means the business tries to acquire the business which is in line.
Radha, your time has ended.
Can I continue for 2 minutes, please?
1 minute.
Okay, sure. Okay, so what, as I said, the forward integration means acquiring the business which is in the production process but at the end stage. That is, we can take an example that electronics company acquiring a after sales service company. Then horizontal integration means a company tries to acquire the business within its existing or which is in its competition itself. So we can take example of Boat that has acquired the company Hammer recently, which was shown in the Shark Tank India show. Then third is concentric diversification. This diversification includes acquiring a business which are related. Then last is conglomerate diversification, which that is, there are no linkages in such diversification where the business is trying to acquire the new business. Then there are external growth strategies. External growth strategies include mergers, acquisitions, and strategic alliance. So merger means a big company acquiring a small company. We can, yes, and second is acquisition. So acquisition is a similar term wherein 2 companies can merge together. So we can take example as Vodafone Idea for the same. And third is strategic alliance. So strategic alliance basically means developing a relationship between 2 or more businesses where they can try to achieve their own objectives. So its example is Maruti Suzuki and Hero Honda. Second last is retrenchment strategy. It includes turnaround strategy, divestment, and liquidation strategies. So these strategies are basically implemented when the businesses are making negative profits or the actions maybe that were pre-decided didn't turn out well as they were planned. So yeah, thank you.
Thank you very much. Very well explained.
Thank you.
May I call Ms. Bhakti over now?
Yeah, sir. Sharing the screen. Is it visible, sir?
Yeah, it's visible. Go ahead.
Yeah. So good afternoon, everybody. So how many of you remember what is SA 510? I guess most of the people have forgotten. Even I was one of you. So the trick to remember, SA 510 So let us read 1 as I and 0 as O. I for initial audit engagement and O for opening stock, opening balance. So the SA 510 is initial audit engagement, which is related to opening balances. So let's go further. SA 510 initial audit engagement. What is scope of initial audit engagement? It deals with the auditor's responsibility relating to the opening balances when conducting the audit initial audit engagement. What does initial audit engagement means? It means the starting procedure of the audit bond. So it was this in SA 510 was applicable from 1st April 2010. So what is the auditor's objective and why do auditor checks the opening balance? So as we know, opening balance plus transaction occurring during the year is equal to closing stock. So all transactions are checked by the using analytical procedures by the auditor. Closing stock is checked as it is present in balance sheet and all the financial statements. But what about the opening balance? Why it is necessary to check the opening balance? As we know that, for example, if the opening balance consists of misstatements, whereas the transactions give true and fair view. So, therefore, it is not important that a closing stock will also give the true and fair view. It might contain the misstatements. So, for that, checking of opening balance is also equally important. So, what is the objective of the auditor? The objective of the auditor is to check that whether the balances are brought forward very properly. The opening balance, that is, which is the closing balance for last year, is been carried forward very properly. Second, there is consistency in the accounting policies. See, it is not compulsion that you have to follow the accounting policy which has been followed last year. But if there is any change, then you have to disclose it or present it in your financial statement in the disclosure part. So let's go further. How do auditor verifies this opening balances? So for that, auditor is required to ask for the previous year's balance sheet and the financial statements. So due to that, he'll come to know that what is the closing stock which was last year, and is it clearly brought forward this year. Audit procedures of current year, providing evidence about the opening stock. What does this abuse line means? This means that last year no sales were made, but still the amount was received. And in case of purchases, no purchase was made, but still the amount was paid. So in this case, there are the debtors and creditors present in our balance sheet. So therefore, to check this, were they materially misstated or returned by error? This can be checked. What about the consistency? As I said, consistency, that you have to follow the consistency, and if there is any change, you have to properly disclose it. So this was about. Next, what is the important point? So talking about the important point, it says that if previous year's audit report has the modified opinion, auditors should consider its effect on the current year's financial statement. So with a very easy example, if in a previous year the stock was calculated on NRV and cost, whichever is higher, not lower, whichever is higher, then the auditor has given the adverse opinion. So in current year also, the auditor has to give the adverse opinion unless the thing is ratified. So this is very important point that all of us should remember. So let's go to the conclusion part. What the conclusion should auditor give? In case of opening stock, there I am talking about two. One is opening stock and consistency. So in case of opening stock, unable to obtain evidence regarding the opening stock. If no evidence is obtained regarding the opening stock, like no balance sheets were received for the last year, then the auditor can give qualified or disclaimer opinion. And if the evidence is obtained, but it is materially
Bhakti, your time has ended.
Yes, last slide. Then qualified or adverse opinion can be given. And the last slide is, if in case of consistency, if it is not consistent and not disclosed very properly, then qualified and adverse opinion should be given. That's it on my side. Thank you so much.
Thank you. Bhakti, there's one suggestion. Have you joined the Casa group?
Yeah. So your voice was flickering. Yeah.
Okay. Have you joined Vikasa? Have you joined Vikasa?
No.
The students.
No, sir.
Hello.
I
Am I
haven't.
audible?
Yeah. You are audible now, sir.
So have you joined the Vikasa group?
No,
Vikasa.
not. No, sir.
So please go and join and go in the national level debate also. You're having the talent with you, so go ahead.
Thank you so much, sir. Thank you so much.
Thank you.
Yeah.
Go ahead with that. Thank you.
Yeah.
So may I call the next speaker, please? Mrudula?
Yes,
Mrudula,
sir.
are you there? Please continue.
Yes, sir. For today's good afternoon, sir. My name is Ludula Kulkarni. For today, my topic is fraud and responsibility of auditor. So for definition of fraud, as per the SA 240, it is an intentional act done by one or more individual among management, TCWG and employees. It involves use of deception to obtain unjust and illegal advantage. Reasons for committing fraud is fraudulent obligation and pressure, unrealistic goal of management, dissatisfied employees, lack of motivation among employees, name game and opportunity. For exam purpose, I would like to share here a memory technique, that is FMK DON. F for financial obligation, M for management unrealistic goal, D for dissatisfied employees, O for opportunity, and N for name game. So the next point is types of fraud. There are two types of fraud: fraudulent financial reporting and misappropriation of the assets. Fraudulent financial reporting, this type of fraud includes manipulation, falsification, and alteration of accounting records, misrepresentation or intentional omission, intentional misapplication of accounting principle regards to amount and disclosure. Misappropriation of assets. This misappropriation of assets involves embezzling of receipts, stealing physical assets or intellectual property, causing entity to pay for goods or service which is not actually received, and using entity's assets for the personal use. Misappropriation of goods. There are various measures to detect misappropriation of the goods, that is inventory. First is keeping records about physical quantities, do periodic check, follow physical verification process, do ratio analysis, rules and procedure for allowing person inside area where goods and inventory kept. And sixth is external security arrangement. Next point is about defalcation of cash. This type of fraud can be done by inflating cash payments and by suppressing cash receipts. Inflating cash payments can be done by making payments against fictitious voucher, making payment against voucher which is of higher amount, manipulating of total wages, casting larger total of petty cash expenses. Suppressing cash receipts can be done by the teaming and ladding, unjust, unauthorized rebate, discount and allowances, writing debts and writing down the assets. So in regards to fraud, duty of auditor is detection of fraud. According to SA 240, auditor should gain reasonable assurance. He have ability to detect the fraud, maintain an attitude of professional skepticism, and fraud by the management is always greater than the fraud by the employee. That is because management has the authority of a higher level, so they can do fraud easily, and also वो fraud करने के बाद उसको छुपा भी सकते हैं easily. So fraud reporting हमको as per the companies act section 143 subsection 12 read with rule 13 के अंडर दिया है, और फ्रॉड के रिलेटेड एप्लीकेबल ऐसे है 240. थैंक यू सर.
Thank you very much, very well said. May I call Neetal now? Neetal, are you there?
Yes, sir.
Please go ahead.
Am I audible?
Yeah, you are audible. Please continue.
Wait a minute, sir. I am sharing screen. Okay, so let's start. I am Nathan Mundada. I am going to present the topic corporate level strategy. Now, unfortunately, it is being repetitive, but you can make it fortunate by learning it twice a day. Okay, so let's begin. There are 4 corporate level strategies. The first is stability, expansion, retrenchment, and combination. So first is stability strategy. Stability is not a do nothing strategy. If we have to do something, that is selling the same products in the same market, it is less risky. And when the product is at its maturity stage, we use stability strategy. When Dell company had spread its network over 95 countries, it has used stability strategy. The next strategy is expansion strategy. There are 4 parts of expansion strategy: intensification, diversification, merger acquisition, and strategic alliance. The first is intensification strategy. There are 3 parts of intensification: market penetration, market development, and product development. Market penetration means developing new customers in the same market by a small change in the product. For example, Lay's adding new products, new flavors in its product. Market development, developing new market by selling the same product. And the best example for it will be Walmart. And then last one is product development. Product development means selling new product in the same market. For HUL soaps, develops new soaps and sell it in the same market. This will be the best example for it. The second is diversification. Diversification also has 4 types: vertical, horizontal, concentric, and conglomerate. Vertical means backward or forward. Backward diversification means diversifying to raw material, and forward diversification means diversifying towards supply, diversifying towards distribution chain. Horizontal diversification. Horizontal diversification means acquiring the competitor company. Facebook acquiring WhatsApp is the example of horizontal diversification. Concentric diversification means diversifying in the existing markets using existing technology and existing production chain. Conglomerate diversification means there is no connection of new product with the diversified product with the existing one. It is totally disjoint. It relies more diversifying from petrol industry to the telecom industry can be the best example for diversification through conglomerate. The next is merger acquisition. Merger acquisition also has 4 types: vertical, horizontal, concentric, and conglomerate. Vertical merger means merger with supplier or merger with distributor. Horizontal merger means merger with direct competitor. Concentric merger means two or more merging organization are also in some way related to each other, and they co-generate with each other. Conglomerate merger means 2 organizations which are totally different from each other merge, get together to complete a specific strategy. Next is strategic alliance. Strategic alliance means 2 or more organizations get together to fulfill any specific strategy. Strategic alliance has many political and economical advantages, but it also has disadvantages, as it can be it has to share its profits, and some secrets may be shared through the process. The next strategy is retracement or turnaround strategy. There are 3 parts of retracement or turnaround strategy: turnaround, divestment, and liquidation. Turnaround means quick in turnaround strategy. There is total change in the top management. It reduces its cost and makes a business from decline, saves the business from decline. Divestment involves sale or liquid. Just a minute, last point. It involves sale or liquidation of portion of business or major division. If divestment is obvious, turnaround strategy is ignored. Liquidation is the most extreme and unattractive strategy. This strategy may seem unpleasant, but dead business is worth more than alive. And the last one is combination strategy. Here's combination when it is not possible to acquire any individual strategy, we can apply a mixed strategy. For example, Reliance can apply telecom stabilization strategy in petrol industry, expansion strategy in telecom industry, and retracement in any other sector of it. Okay, thank you. That was all from my side.
Thank you. Very well said. Thank you very much.
Thank
Now,
you, sir.
may I call the next speaker, please? Vidya, are you there?
Yes, sir.
Please start the presentation. And
Yes,
all
sir,
the
I'm
best.
sharing my screen, sir. So its screen is now.
Okay, you can directly start. If you're confident, go directly if it's possible. Do you want the screen?
Sir, I've been to the next, sir. Please, sir. Screen is
Okay,
now.
okay, will do. So Pranjali, are you ready? Sorry, Pranali?
Yes, sir.
Please go ahead.
1 minute, sir. Am I audible and visible, sir?
Yes, you're audible. Please go ahead. A bit louder.
Yes, sir. Good afternoon, everyone. Our today's topic is money market, chapter 3 of economics. Let's start the journey towards money market. What is money? Money is the center of every economic transactions and plays an important role in our economy. It provides a means of payment and medium of exchange. It is generally acceptable and recognized effortlessly. And at a fundamental level, money conveniently access through money we can conveniently access goods and services. So we should know about the demand of money. It gives three approach. Classical approach states that the demand of money is only as a medium of exchange, and neoclassical approach states that it is only for store of value. But the Keynesian approach states that it is for both medium of exchange and a store of value. It provides three motives: transaction motive, speculative motive, and precautionary motive. Transaction motive divides into two parts: income and business, where the speculative motive depends on store value of money, and where precautionary motive depends on the uncertainty which may be happen in the future. And another one is liquidity trap. It is a situation in our economy which is not good for the investor, where the set of point on liquidity preference schedules that the percentage or change in demand of money to the percentage change in rate of interest is infinite. They are inversely relationship, where the 0.5% is the lowest interest rate, where people prefer to hold cash rather than holding securities, which creates a horizontal part which is known as liquidity trap, where it is red line. It is not good for our economy. So Next is post-Keynesian approach, which divides in three parts. Friedman quantity theory of money states that the money is an asset, where the role of money is for creating assets. Where inventory approach gives analyze the individual's behavior, and then third one is behavior towards risk. It is the foundation for the liquidity preference. Now we are moving towards the supply of money, where total quantity of money available to people in an economy, which includes household, firms, institutions, but except government and banking system. Here are the formula given by the RBI for the monetary aggregates, and the reserve money and the liquidity aggregates for the further calculation of credit multiplier. Now we are moving towards a money multiplier, which was propounded by the Milton Friedman and Anas Quazzard in 1963. The money multiplier states the behavior of a central government which controls the issue of money in the supply of high-powered money. It is the ratio of a money supply to the change in a monetary base. Now moving towards the second multiplier, which is the credit multiplier, which reflects the bank's ability to increase money supply. It shows that how much money will be created by the commercial banks by lending the available money in excess of the RBI reserves requirement. The credit multiplier formula is 1 upon required reserve ratio. Now we're moving towards the monetary policy. Monetary policy, it encompasses by all the action taken by the central government for directly controlling the money supply and indirectly controlling the demand of money. So it divided into two parts: money management policy and a credit policy. Here are the objectives of monetary policy. The primary and the most important objective of monetary policy is to stabilize the prices and to stabilize the growth of our economy and the full employment. And also the equal distribution of income is also important in a monetary policy, and to encourage investments in government policy to create efficient government securities market, and also important to exchange rate stabilities, and it regulates to issue the bank notes. Here are the operating procedures and instruments. The operating target, the variable that is the inflation, which may affect the monetary policy, where intermediate target is economic stability with the help of the operating target. Here are the
your time has ended.
1 minute. Here are the some of the instruments which for the monetary policy. First is CRR, cash reserve ratio, and SLR means statutory liquidity ratio. LFF means liquidity adjustment facility, which is started in 2000, and here the marginal stability facility, and MSS means marginal stabilization scheme, and BR means bank rate, and OMO means open market operation. Here are the, as per April 2021, current rates are given. Then monetary transmission mechanism. Here are the 4 channels which will be used by the central bank for developing and analyzing the monetary policy. So here we end our journey. Thank you everyone for cooperating with me. Thank you.
You very well explained, and you've thrown the knowledge, light on this knowledge. Particular aspect. Thank you very much.
Thank you, ma'am. Thank you, sir. Sorry.
Okay, no problems. So Vidya, are you ready, please?
Yes, sir.
Please go ahead.
Good afternoon, sir. Good afternoon, friends. I am myself Vidya Priya. I am here to show the presentation about the subject corporate and other laws. The chapter name is Basics of Law. In Basics of Law, we are going to learn about what is a law, what are the components of law, what is an act, and what are the components of an act. If we come to law, law is a set of provisions, rules, codes, or guidelines governing any issues. Why law is brought out? Because it provides a benefit and safety to people and to curb existing unwanted practices. That means to abolish any unwanted activities which people does. And next is a component of laws. The first one is Bare Act.
The BAR Act and Act are the same. In this, we are going to learn about the procedures for bringing the Act. First, we have to identify the needs for bringing an Act on the basis of past events and the future events. By past events, we can provide some benefit and safety, and to overcome that event. And on the basis of a future event, we can prevent and destroy that event not to make happen. Next is forming standing committee. In the standing committee, the standing committee was formed by secretary with judges from India and all over the world. The standing committee is also called as drafting committee because the lawmaker will be draft a bill. The persons in standing committee will have outstanding experience in their relevant fields. Currently, Companies Act 2013 standing committee named as JJ Irani Committee, and it is formed with legislative experts and as well as industrial experts. In legislative experts, we have law knowledge, the persons who have knowledge of law, and in the industrial experts, we have like Ratan Tata from Tata Groups. And next is Parliament involvement. Parliament involvement, we have two sessions, namely reading session and approval session. Both will be performed by a member of parliament, and if majority approved, the bill becomes act. If majority doesn't approve, then the act will not come into effect. Next is president assent. In this, the act will be sent to President of India for approval, and if President approved the act, it will be notified in the official Gazette of India, and it will come into existence as BAR Act. And next one is rules. To make a change in an act, the complete procedures have to be followed, which we have been seen just before. That is impossible. So the draftman will permit concerned governing authority to make rules which are generally in nature of procedures, numericals, and forms. We can identify the rules by the phrases prescribed as, and the rules under Companies Act 2013 are framed by MCA, Ministry of Corporate Affairs. It is a government governing authority of Companies Act. As the same, we have tax governing authority as CBDT, Central Board of Direct Taxation. And next is notification. Notification is to update about the happenings and to bring amendment without an amendment act. In notification, the act will be changed, but not the BAR Act. BAR Act will not be changed. If we want to read notification with BAR Act, we have to read notification with next released amendment act. And next is circulars. Circular provides to bring clarification on disputed or unclear issues in any act. Next is case laws or judiciary. We have two, NCLT in civil, which is National Company Law Tribunal, and next is National Company Law Appellate Tribunal. Next is ROC, Register of Companies. Next is RD, Research and Development. And in criminal, we have special courts, which is mainly for financial crimes. And next is a component of an act. In this, first is preamble. In preamble, preamble means it is a purpose or objective of an act. For example, in income tax, preamble is to levy a tax on total income. And next is chapter. We have 29 chapters in Companies Act 2013. It is a division of an act. It is a systematic division of an act. And next is section. Section is a division of some meaningful parts. And next is subsection. Subsection signifies content in section. Next is clause. Clause is a part of section which signifies the content covers in original section. Next is subclause.
Nidra, your time has ended.
Only a few minutes. 1 minute, please. Next is subclause. Subclause is a part of section which signifies the content in section. sorry, which signifies content in clause. And next is proviso. Proviso is exceptions and conditions. It is identified by the phrases like provided that, provided also that, and provided further that. And next is explanation. Explanation is terms and its meanings. Next is definition. Definition is in section 2 in any act there will be a definitions, and it is a it gives provides a meaning of any terms in any act. Next last is illustration. A lawmaker's intentions may be sometimes cannot be may not be understand by the peoples, so in such case we have illustration. It provides it interpret the meaning in a truthful sense. And that's it. Thank you, sir. Thank you, friends, for your patience.
Thank you very much. Vidya, just wanted to ask you something. Should I?
Yes, sir.
So how was your experience, overall experience now?
Sir, I gained
How was your experience? Okay. Overall experience.
nice, sir.
Nice. Okay. And you were very confident while speaking. The presentation you did was very good. But only the thing is, now the voice was good, but your facial expressions, why were you so nervous? Why are you appearing so nervous? Show that confidence on that face also, no? Okay.
Sir, I'm looking for only the screen, sir, so I didn't see my face.
Okay, no problems. But just show confidence on the face also, right?
Okay,
Otherwise,
sir.
you have presented it very well. Thank you. Thank you for the inputs.
Thank you, sir.
Most
I
welcome.
hope you all enjoyed this
Yeah,
class.
definitely, yes.
Thank
And
you, sir.
yeah, from your side, I need to know, how did you, like, was it an enjoyable thing? And are you learning something out of this?
Yes, sir. My fear is I'm a stage fear person, so it is an opportunity to lose my fear.
Okay. So, and are you learning from today's session? Are you learning something? Are you getting something from it?
So, yes, sir. I have learned many things from friends and faculties.
Okay. Thank you. Thank you very much.
Yes,
So,
thank you, sir.
thank you, my dear friend. So, may I call the next speaker, please? Vaishnavi, are you there?
Yes, sir.
Please continue.
Good afternoon, everybody. Myself, Vaishnavi Chaudhary. First of all, thank you, sir, for giving us this opportunity. Today, we will be just doing a quick recap.
Vaishnavi, just tilt your screen.
Okay, sir. Just a minute, sir.
Okay, you may start, please.
Yes,
Yes.
sir. Yeah. So today we will just see a quick recap about the Section 7 of CGST Act 2017, that is Subclass. So what happened in the earlier tax regime was the word that was actually taxable was any taxable event, that is any transaction on which we have to pay a tax. But due to that, various interpretations were of a conflict, that which substance was a tax, which transaction was a taxable one and which was not. So to end up all this dispute, the comprehensive taxable event was came up, and that is known as supply by the CGST Act by CGST Act. Now, what is exactly supply? So, according to Section 7, Subsection 1, Clause A, supply includes all forms of lease, rental, barter, exchange, disposal, and it includes both services, goods, services, and both as well. It is mainly for consideration by. Okay. I will repeat the definition of supply once again. Supply includes all forms of supply of goods or services of both, such as sale, transfer, barter, exchange, license, rental, or disposal, made or agreed to be made for consideration by a person in the course or furtherance of business. As we have seen that the word include is mentioned, so it is an inclusive definition and not an exhaustive one. Going forward, according to Section 7, Subsection 1, Clause B, it tells us that if we import any service for any further source for a consideration and it is not considered to our business, then also it will be deemed as supply and we have to pay GST on it. Moving forward, Schedule 1. Schedule 1 is also known as Section 7, Subsection 1 Clause 3. It tells us about deemed supply, that what are the cases in which the activities that we perform are also will be automatically deemed to be as supply. In that, case number 1 is if we have permanently disposed any business asset and we have already credited any input ITC on it, that is input tax credit, then it will be a deemed supply. Second case is if there is a supply between both distinct persons and that supply is not exceeding 50,000 rupees in a financial year, then it will be also treated as a supply. Third case is a transaction between a supplier and an agent. If there is a transaction between a supplier and an agent and the agent is not a pure agent, then it will be also deemed as supply. And in fourth cases, if there is importation of service and there is no consideration, but it is for further course of our business, then it will be treated as a supply. Next is Schedule 2. Schedule 2 is Section 7, Subsection 1A. In that, it basically differentiates between what is good and what is service, means what is supply of goods and which is supply of service. So when there is a transfer in title of goods, I repeat, title of goods, then it is a supply of goods. But when there is a transfer in right of goods, it's right in goods, then it is known as supply of services. Now there is a list known as negative list in which the activities which are carried over here are not at all included. It as either a supply or either a service or a good. So it is known as basically Schedule 3, that is Section 7, Subsection 2, and the activities covered over here are the services provided by an employer to the employee. Second is the services that are given by the courts and tribunal established under any law. Third is functions performed by MP, LA, chairman, directors, personnel holding any constitutional post. Fourth is services of funeral, burial, crematorium, and transportation of the deceased. Fifth is sale of land and building. And sixth is actionable claim other than lottery, betting, and gambling. Here, the most important thing to consider is government can anytime notify any extra inclusions in this list, and that can just be included in the negative list, and we don't have to consider it as a good or service. Thank you, sir.
Thank you. Thank you very much. Okay. May I call the next speaker, Jagruti? Are you there?
Yes, sir.
Please continue.
Good afternoon, sir. Good afternoon, everyone. My subject is corporate and other law, and my topic is limited liability partnership. Limited liability partnership, which is registered under the Limited Liability Partnership Act 2008 with the Ministry of Corporate Affairs. It is separate legal entity, and liability of partners is limited to their agreement and contribution to the limited liability partnership. Separate legal entity means partnership matlab means partners can एक minute sir. Limited liability partnership agreement is done between partners to govern their rights and duties, and to which decide their capital contribution. For formation of limited liability partnership, minimum 2 designated partners and are needed, and and one must be individual and resident of India. Advantages of limited liability partnership. Advantage: lower compliance and fewer regulation as compared to the companies. It means पार्टनरशिप लिमिटेड लायबिलिटी पार्टनरशिप में AGM नहीं होती और उन्हें एजीएम नहीं होती और उनको डायरेक्टर रिपोर्ट भी फाइल नहीं करना पड़ता और उनको कंपनी सेक्रेटरी की भी जरूरत नहीं पड़ती और इजीली प्रॉफिट डिस्ट्रीब्यूट कर सकते हैं और एक एडवांटेजेस ऐसा है कि लिमिटेड लायबिलिटी पार्टनर्स में पार्टनर्स की लायबिलिटी लिमिटेड होती है, लेकिन सम केसेस में वो अनलिमिटेड भी हो सकती है। डिसएडवांटेजेस में इन एबिलिटी टू रेज वेंचर्स कैपिटल, इसका मतलब अगर कोई नई फर्म है मतलब नया स्टार्टअप है और उसको अगर कैपिटल की जरूरत है तो वो उसके लिए लिमिटेड लायबिलिटी पार्टनरशिप को कुछ काम की नहीं है, क्योंकि वो इक्विटी फंड्स नहीं ले सकते और वो शेयर भी इशू नहीं कर सकते। और डिसएडवांटेजेस में पॉइंट नंबर 2 में अगर वो कोई कंप्लायंस और रिटर्न टाइम पे फाइल नहीं करते तो उनको पेनल्टी भी भरनी पड़ती है अप टू 5 लाख तक। देन टैक्सेशन ऑफ लिमिटेड लायबिलिटी पार्टनरशिप, checking of allows salary and interest to partner as per section 40 subsection B of Indian Income Tax Act. Allow salary calculate करने के लिए प्रॉफिट बिफोर सैलरी टू पार्टनर फर्स्ट 3 लाख के लिए 90% और 1,50,000 विच एवर इज हायर पे अलाउ होता है और बैलेंस में मतलब 3 लाख के ऊपर पे 60% अलाउ होता है। और other important point in limited liability partnership, first is no audit is required if turnover is less than 40 lakhs or the total contribution does not exceed rupees 25 lakh. Then limited liability partnership cannot form for the charitable purpose and non-profit organization. Then any individual or corporate can be a partner in limited liability partnership except unsound mind person and undischarged insolvent. Then in case of fraud, the partner's liability will be unlimited. That's it. That's all about the limited liability partnership. Thank you, sir.
Thank you for giving all the insights. Okay, may I call upon the next speaker? Ada Fayaz, are you there?
Yes, sir. I would like to present my screen.
Yeah, please.
So today I have selected the subject financial management, topic cost of capital. So let's drill down the word cost. What is the cost? The cost is not the amount which the company plans to pay. Rather, it's an expectation of the stakeholders from the business. There are the major ways of obtaining the capital are equity, debt, and preference. So what is cost of capital? These are the returns expected by the providers of capital as a compensation against their contribution to the total capital. How are these costs represented? So the cost of debt is represented as KD, cost of equity is represented as KE, and cost of preference is represented as KP. Let's see the computation of each type of capital. Debt are of two types, irredeemable debt and redeemable. Irredeemable debt is the debt which are not redeemed by the issuer. Since we get the tax shield upon the interest as per Income Tax Act, so the formula is derived as interest into tax shield upon market value. In the given example, you can see the actual rate of interest provided by the company is 7%, but the cost to them is actually 5.4%. Cost of redeemable debt. These debts, this type of debt are paid by the issuer after a certain period of time. So you can see the formula is interest plus amortization upon average into 100. Next are preferentials. There can be two types of preferentials, irredeemable and redeemable. Irredeemable ones are not nowadays not issued, but the formula for the same is dividend upon net proceed, which means that the dividend provided is equal to the cost to the company. Next is redeemable preferentials. Redeemable preferentials and redeemable debt formulas are near about same. Just there you get a tax shield and here you don't get the same. Now there are different methods to compute the cost of equity. Dividend price approach, earning price approach, growth approach, realized yield approach, capital asset pricing model. The first three methods are not used in the practical life since they assume that the dividend earning or the growth will be given constantly to the investors by the company, which is not possible. Realized yield approach can be seen from the investor's angle. You can see the formula here. The investors get dividend, and along with the same, they get the price appreciation, which is presented over here. Next is capital asset pricing model, CAPM. Here you can see the risk-free factor and the market expected return. So what is the risk-free factor? It's basically the government bonds, the interest rate the government bonds provide, or such a same. And beta refers to the changes that due to the change in market, how much impact will it have on your shares? And so the formula is derived. So now when computing the overall cost of capital for a company, following steps should be followed. First, calculate the cost of capital based on above formula. Find out the proportion of capital to the total capital. Multiply the proportion with the cost of capital, and aggregate of cost of capital will be called WACC or KO. Thank you.
Thank you very much. Other, just wanted to know, Other, you participate in other competitions or other activities also, or you're just studying?
No, sir. Actually, I do have some stage fear.
Well, you actually are a very good speaker. You should just take new experiences and go ahead. Give yourself chances, okay?
Yeah, sure, sir. Thank you.
Please give yourself chances. You're
Yes,
a great
sir.
speaker.
Thank you.
Thank you. May I call the next speaker, Ashish, please?
Yes, sir. Wait a minute. I will sharing my screen.
Okay.
Hello, sir. Is screen visible?
Yeah, it's visible. Please start.
Good afternoon, sir. Good afternoon, everyone. Myself, Ashish Same. First of all, thank you, sir, for giving me such a nice platform. Today, my topic is, wait a minute. Today, my topic is e-way bill under the Goods and Services Tax. Introduction. First of all, introduction. Before e-way bill introduced in India, there was a way bill. It also contains all details, include name of consignor and consignee, the point of origin, destination of consignment, and also route of conveyance. But there was not having any proper mechanism. उसमें सभी चीज ठीक तरह से ट्रैक नहीं हो पा रही थी. And then in 1st April 2018, e-way bill was introduced. E-way bill is a proper compliance mechanism to ensure that goods having transported complying with the GST law and is an effective tool to track movement of goods and also for the checking tax evasion. And it is mandatory for interstate movement. Rule 138 of CGST rules 2017 prescribes e-way bill as the document to be carried for the consignment of goods. And it is compulsory to carry while transportation, because while transportation of goods, the proper officer can intercept the conveyance at any time and any place, and he may require a person in charge of said conveyance to produce the documents and also allow the inspection of goods. Let's briefly understand what is an e-way bill. मतलब जे यहाँ पर ई-वे बिल की डेफिनेशन दी है, तो इसका मतलब जो भी व्यक्ति गुड्स की मूवमेंट करना चाहता है, उसे मूवमेंट करने से पहले एक डिजिटल पोर्टल पर जाकर उस गुड्स के मूवमेंट के बारे में रिलेवेंट इंफॉर्मेशन फिल करके एक बिल जनरेट करना पड़ता है, उसे ई-वे बिल कहते हैं. एंड इट इज ऑल्सो एक्ट एज अ मूवमेंट ऑफ गुड्स. ओके, देयर आर फ्यू रूल्स ऑफ ई-वे बिल. रूल नंबर 138, मूवमेंट से पहले जो इंफॉर्मेशन फिल करनी पड़ती है उसके बारे में बताता है. रूल नंबर 138A, जो डॉक्यूमेंट्स एंड डिवाइसेस पर्सन इन चार्ज को कैरी करना पड़ता है व्हाइल ट्रांसपोर्टेशन, ये उसके बारे में बताता है। रूल नंबर 138B is about verification, and rule number 138C is about inspection and verification done by proper officer, and rule number 138D proper officer ने जो inspection करने के बाद उसकी information पोर्टल पर देनी पड़ती है, उसके बारे में बताता है। And the next point is when should EVA bill be issued? Okay, when should EVA bill be issued? It basically it has two main conditions. First one, whenever there is a movement of goods, and the second is consignment value exceeds rupees 50,000. In relation to supply for reason other than supply, means supply may be there or may not be there, but above two conditions are satisfied, then supplier needs to generate EVA bill. कंडीशंस में बताया गया था कि कंसाइनमेंट वैल्यू 50,000 से ज्यादा होगी तो बिल जनरेट करना पड़ता है। तो पहले हम जान लेते हैं कंसाइनमेंट व्हाट इज कंसाइनमेंट वैल्यू, और कंसाइनमेंट वैल्यू में कौन कौन से वैल्यू इंक्लूड होते हैं। फर्स्ट जो कंसाइनमेंट वैल्यू में फर्स्ट इंक्लूड होता है वो वैल्यू डिक्लेयर्ड इन एन इनवॉइस ऑफ बिल और बिल ऑफ सप्लाई और डिलीवरी चालान। मुझे इसमें जो वैल्यू बताई गई है वो वैल्यू includes central tax, state or union territory tax, integrated tax and cess charged, and shall not include the value of exempt supply and also not include freight charges. Who should generate an EVA bill? First, registered person. If above said conditions are satisfied, then registered person need to generate EVA bill. In case of unregistered person, in the supplier is not registered, then compliance to be done by recipient as if he is the supplier. म्हणजे recipient को EVA bill generate करना पड़ता है, and also transporter needs to generate EVA bill if the supplier has not generated EVA bill. Supplier ने EVA bill generate नहीं किया तो transporter को उसे generate करना पड़ता है। And special situations where EVA bill needs to be issued even if consignment value is less than rupees 50,000, 50,000 से less होने के बाद भी EVA bill generate करना पड़ता है। ऐसी दो conditions है।
Ashish, your time has ended.
Okay, interstate transfer of goods by principal to job worker, interstate, and the second is interstate transfer of handicapped goods by a person completed from obtaining registration. Situations where EVA bill is not required to be generated: non-motorized conveyance, alcoholic liquor for human consumption up to distance of 20 km, 5 petroleum products and defense formation, empty cargo containers treated as no supply under schedule 3 of the act, and consigner of goods. मतलब ऐसा केस जहां पर कंसाइनर सेंट्रल गवर्नमेंट है, स्टेट गवर्नमेंट है और लोकल अथॉरिटी है और ट्रांसपोर्टेशन रेल से हो रहा है तो EVA बिल जनरेट करने की जरूरत नहीं है। एक बार EVA बिल कब जनरेट करना पड़ता है वो ट्री डायग्राम से जान लेते हैं। मूवमेंट ऑफ गुड्स इज मस्ट, and supply may be there or may not be there, irrelevant to the supply, and the value according to the value, consignment value exceeds rupees 50,000। जनरल में तो 50,000 से आगे जाता है तो EVA बिल जनरेट करना पड़ता है, and it has some exceptions. It is included in the rule 138 sub rule 14, and consignment values 50,000 से लेस होने के बाद भी अब इन जनरल केसेस में हमें EVA बिल जनरेट करने का ऑप्शनल होता है, लेकिन इन एक्सेप्शनल केसेस इट इज कंपल्सरी टू जनरेट EVA बिल आफ्टर वैल्यू इज लेस देन 50,000। इन फर्स्ट केस इंटरस्टेट ट्रांसफर ऑफ गुड्स बाय प्रिंसिपल टू जॉब वर्कर, एंड इन सेकंड हैंडीक्राफ्ट गुड्स का ट्रांसपोर्ट हो रहा हो तो, एंड इन जनरल केसेस इट इज ऑप्शनल। थैंक यू सर।
Thank you very much, very well explained. Okay, may I call the next speaker please? Akshay. Akshay, are you there, please?
Yes, sir, I am here.
Please go ahead.
Sir, I am sharing my screen. Is it visible?
No, not still.
Yeah, now is it visible? Okay. Let's.
Yeah, it's visible. Please go ahead.
Sir, now let's start with the why animation is not working.
Is there some problem you're facing?
Yeah, sir, the animation not working.
Okay, should I call the next speaker and then you continue?
No, sir, 1 minute. Let's start with the Indian Contract Act 1872. We are going to study contract of indemnity and contract of guarantee. First of all, we understand the contract of indemnity. The contract of indemnity. The term indemnity means compensate the party who suffered from loss. Section 124 define its one party promised to save other from loss caused to him by conduct of promisor himself or by the conduct of any other person. Let's see the parties of the contract of indemnity. There are two parties in the contract of indemnity. First is indemnifier, second is indemnified. The parties who promise to save other from the loss is indemnifier, and the parties who promise to be saved against the loss is indemnified. Let's see the example. Here A is the creditor. A gives the loan to B. If B fails to repay the loan, then C will be gives amounts to B to pay the loan of A. Right of indemnifier. So what is the right of the indemnifier in the contract? So if indemnifier acting within the scope of his authority, he may able to recover all damages which he may to compel to pay in any suit, any cost he incur in any suit, or all sums bringing or defending the suit. The contract of indemnity is not rights of indemnifier is not exhaustive. If he incurred any absolute liability, then he is able to recover from the indemnifier. Let's see about the next special types of contract, that is contract of guarantee. In section 126 defined contract of guarantee. There is defined as perform the promise made or discharge the liability of the third person in case of his default. This is the contract of guarantee. Yeah. There are three parties in the contract of guarantee. First is surety, second is principal debtor, and creditor. The person who gives the guarantee is surety. The person in respect of whose default the guarantee is given is principal debtor, and the person to whom guarantee is given is creditor. Contract of guarantee may be oral or may be written. Types of guarantee, there are two types of guarantee. One is specific, second is continuing guarantee. Specific guarantee where the which is given for the particular transaction. Continuing guarantee is given for the series of the transaction, unlike one or more transaction. Sorry, two or more transaction. Discharge of surety. If in the case of guarantee, contract of guarantee, surety will be discharged if following three criteria is being satisfied. By revocation of the contract of the guarantee, if the contract has been performed, या तो revocation हो गया, तो surety will be discharged by the conduct of promisor conduct of creditor or by the invalidation of the contract of guarantee. अगर कॉन्ट्रैक्ट ही इनवैलिड हो गया तो फिर श्योरिटी डिस्चार्ज हो जाएगा. By let's see about the by which is the conduct, which are the main conducts of the creditors by which surety will be discharged. Variance in terms of contract. If a creditor made any variance or change in the terms of contract, then surety will be discharged. Release or discharge of principal debtor. If principal debtor repays the loan, then surety will be discharged. By impairing surety's remedy. Compounding by creditors.
Akshay, your time has ended.
Yeah, so थोड़ी देर. Compounding by creditor with the principal debtor or by loss security. Revocation of continuing guarantee. Continuing guarantee was given for the series of the transaction. Revocation can be made by notice or by death of the surety. If surety gives the notice to both the party, then contract of continuing guarantee will be end or by the death of the surety. Right of surety against principal debtor and creditor. Against principal debtor, he has three rights: rights of subrogation, right to security, right to recover amount paid. And the right against the creditor: right to subrogation, right to security, right to sue, right to claim set off. If there is more than one surety, then the contribution is between pure surety, two or more surety for the same debt jointly or severally liable under the same or different contract with knowledge of each other or maybe not, are liable to pay an equal share of the whole debt or part of the debt which remain unpaid by the principal debtor. Thank you.
Thank you. Thank you very much, my dear friend.
Thank you, sir.
May I call Mitali now? Mitali, are you ready?
अक्षय स्क्रीन शेयरिंग ऑफ कर दे तेरा.
Akshay, please stop the screen sharing part from your side. Maybe his laptop is stuck.
सर आप कर दो, यहाँ से शायद नहीं होगा, यंग हो गया. Yeah, sir.
Okay. Now, Mitali, go ahead, please.
Yes, sir. Hello, sir. Hello, everyone. Today my topic is declaration and payment of dividend. First of all, we understand the meaning of a dividend. So, dividend means payment made by company to its shareholder. Usually, is a distribution of profit. A dividend is allocated as fixed amount per share, and shareholder receiving dividend in proportion to their shareholding. Dividend include also interim dividend. Next topic is types of dividend. There are two types of dividend: interim dividend and final dividend. Interim dividends means when board of director declare dividend between two AGM, means annual general meeting of the company. It's called interim dividend. Next, final dividend. When a dividend is declared at the AGM of the company, it's called final dividend. Next topics: types of share. There are two types of share: preference share and equity share. Preference share are divided in two types of cumulative preference share and non-cumulative preference share. In cumulative preference share, the dividend carries the right of fixed amount of dividend or dividend at fixed rate. Dividend is payable even if no profit in current year. It's payable in future profit. In a non-cumulative preference share, right to fixed amount of dividend, and in case no dividend is declared in the year due to any reason, the right to receive dividend for the third year is expired. Not entitled to a year of dividend in future. Next topic is
Equity share, those shares which are not preference share. Equity shareholder do not enjoy preferential right in the matter of payment of dividend or repayment of capital. The rate of dividend is recommended by board of director. Rate of dividend rate is depend upon the dividend policy and the availability of profit after satisfying the right of preference shareholder. Next topic is procedure of the declaration of dividend. There are two types of dividend: final dividend and interim dividend. In final dividend is recommended by board under the section 134. In annual general meeting, member may be declared dividend by passing ordinary resolution. Member may reduce the rate recommended by board of director but cannot increase rate. In interim dividend is declared by board. No dividend shall be declared and paid by company from its reserve other than pre-reserve. Next topic is declared dividend. Dividend is declared within 30 days. If dividend not declared and paid within 30 days, so within 7 days, deposit under the unpaid dividend account. If not paid, if not deposited under unpaid dividend account, then pay interest at the rate 12% per annum. When it's deposited under unpaid dividend account, then with 19 days statement about the name, address, which amount unpaid dividend, and it's put on website of company and website approved by government for this purpose. And within 7 years of the deposited under the unpaid dividend account should be transferred to IPA account, unpaid dividend and interest. Thank you.
Hello, sir.
Hello, Mitali, is it over?
Yes, sir.
Your voice was cracking. Okay, fine. Okay. So may I call the next speakers, please?
Yes, sir. I'm sharing this.
Here, please. Please unmute yourself, Anshul.
Sorry, sir.
It's okay.
So this topic has been already taken twice. So I'll just not go into depth. I'll just explain the examples more. So yeah, Pratiksha, now you can start the timer. So my topic that I've chosen was the corporate level strategies in the subject SM strategic management. And going ahead with the introduction, it says that corporate level strategies occupy the highest level of strategic decision making. It means that it is the initial and the top level of the strategic decision making, and it covers action dealing with the objective of the firm. It means that it curates the objective of the firm that a firm wants to achieve. And moving ahead, it says that acquisition and allocation of resources means acquisition and allocating the resources effectively and efficiently is also included in the corporate level strategies, and also coordinating of strategies of the various strategic business units is also included in it. Moving ahead with the Gluck and George generic strategy alternatives. The first one is the stability strategy. Stability strategy means that it basically means that it consists of the same product line, same customer base, and it maintains the same level of effort. An example of it is Dell. Secondly, it is expand. The second one is expansion. An expansion strategy means redefinition of business and adding its scope of business and growing. And its example is Amazon. The third one is retrenchment. Retrenchment strategy means it also means reducing of its products and services. And its example is Procter and Gamble. The fourth one is combination strategy. In the combination strategy, it is a mixture of either of stability strategy, expansion strategy, and retrenchment strategy, because these three are not mutually exclusive. So these three can be combined, and mixture of it can be used by any firm. For example of that was Texas Air, which used the expansion strategy in the Continental Airlines unit, and it used the retrenchment strategy in the Eastern Continental unit. Moving ahead was with the expansion strategy. Expansion strategy can be it is done through 4 means: intensification, diversification, merger and acquisition, and the last one is strategic alliance. Moving ahead with the intensification, the first one, it can be done in 3 means. Market penetration, that means existing products it is sold in the existing market. The market penetration strategy example was Nike. Nike features the famous athletes in print and television ads designed to take the market share within the athletic shoes business from apart from Adidas and other rivals. So, and the second one, moving ahead with the second one, it is market development. It means that existing products are sold in the new market, not the same old previous one, but in the newer market, newer customer base. And the example of the market development was when Starbucks, earlier Starbucks has stepped beyond selling the coffee beans only in its stores. Now it sells beans in grocery stores also. So it directly sells to business sellers. So it can be made available to the consumers, even those who do not visit Starbucks at coffee houses. So that was the example of market development. The third one is product development. In product development strategy, it means that the market will be existing, the same one, existing one, but the products will be new or an upgraded version of it. So the product development example was Coca-Cola and Pepsi regularly introduce new varieties such as Coke Zero and Pepsi Cherry Vanillion. And it is an attempt, they make an attempt to make the market share from each other and the smaller levels. So yeah, that is the product development example. Moving ahead with the diversification. Diversification is done in 4 manners: vertical integration, horizontal integration, concentric integration, and conglomerate integration. In the horizontal integration, it is done through 2 ways: backward integration and forward integration. Moving ahead with the mergers and acquisition. Mergers and acquisition, the other 2 people have already explained what all the 4 means. So I will just explain the examples. The example that I have found out it is that vertical merger. So vertical merger, it is that Tata Motors Limited acquired an 80% stake in the Interlix Tree, an Indian designing company, for the aforesaid amount that you can see. And for the horizontal merger, the example is merger of Bank of Mathura with the ICICI Bank. The third one is co-generic merger. Co-generic merger example of it was Citigroup's acquisition of the Travelers Insurance. And the last one is conglomerate merger. Its example was Walt Disney Company, merger of Walt Disney Company and the American Broadcasting Company. Yeah. And moving ahead with the strategic alliance, the fourth one.
Achal, your time has ended.
Yeah, just 1 minute. Moving ahead with the strategic alliance. Strategic alliance basically means 2 companies forming an alliance together to meet the certain objectives or attained objectives. That way, neither of them can complete on its own. So they come together to achieve its objectives. And the next thing, the last one is retrenchment strategy. Retrenchment strategy, it can be done to 3 ways. Turnaround strategy. It also means internal retrenchment. And the example of the turnaround strategy was when Nokia announced its global turnaround strategy by rapidly shifting market for smartphones, when it was profiting from its new partnership with Microsoft and developing services based on its own assets. And moving ahead with the second one is divestment. It is also known as external retrenchment. So the example of a divestment is when HUL company divested its marine food business to Mumbai-based Temptation Foods, since it was their main core business. So it focused to the Mumbai-based Temptation Foods. And another example that I would like to give in divestment is when Asian Paints took an international divestment, when it started to divest its stake in Australian operations because of the lower profits. The profits were getting low. So yeah, and the last one is liquidation. As you can see, it is the most extreme and unattractive strategy adopted by any firm. And the example of liquidation that I have searched is MH Carbon and MF Global, and they both opted for voluntary liquidation due to insolvency and bankruptcy. Thank you so much.
Thank you very much. And you just utilized the things by explaining with the examples. That was good. But
Yes. Thank you.
thank you. So may I call the next speaker? Jayashree, are you there, please?
Yes, sir, I'm here. Hello, everyone. My name is Jayashree Subhash Shinde, and I'm from Aurangabad. And my topic is residential status as per Income Tax Act 1961. And today I'm going to cover basics of residential status, determination of residential status, and residential status for individual HUF, company, other SSC, and scope of total income and tax incidences. In basics of residential status, first point is total income of an SSC cannot be computed unless we know residential status of the SSC during the previous year. Then residential status shall be determined separately for each category of entity. Then residential status is determined for previous year because we have to determine the total income of the previous year only. Then residential status is to be calculated for every year because it may change year to year, and an individual can be a resident for more than one country in a previous year. Then second one is residential status is determined for various categories of entities like individual, HUF, company, and other SSC. Residential status of individual can be determined as per section 6 subsection 1. Basically, for determination of residential status, there are two conditions, and first one is if the individual stays in India for 182 days or more in previous year, or stays in India for 60 days in previous year and 365 days in 4 previous preceding year, then such individual shall be treated as resident. Otherwise, it is to be treated as non-resident. Then here are 3 category of cases which falls under the exception to the basic conditions, under which in first case, Indian citizen who is a ship crew member or employee or a person outside India for the employment purpose, if stays in India for 182 days or more in previous year, then such person is to be treated as resident. Otherwise, it is to be treated as non-resident. In second condition, if an Indian citizen or person of Indian origin comes on visit to India in previous year, and total income of such person is 15 lakh or less than that, excluding his foreign income, and if such person stays in India for 182 days or more in previous year, then such person is to be treated as resident, or otherwise it is to be treated as non-resident. Under third case, if an Indian citizen or person of Indian origin comes on visit to India in previous year and total income is more than 15 lakh, excluding their foreign income, and if such person stays in India for 182 days or more in previous year, or stays for 120 days or more during previous year and 365 days or more during 4 years immediately preceding previous year, then such person is to be treated as resident, otherwise is to be treated as non-resident. Further, an individual who is classified as resident can be further classified into 2 categories, that is resident and non-ordinarily resident as per section 6 subsection 6, or resident but not ordinarily resident, that is RNOR. And those both the additional conditions are to be satisfied under this section. First condition is if the person is resident for at least 2 out of 10 previous year in immediately preceding previous year, or and he has been in India for 730 days or more during 7 previous years immediately preceding previous year. Then residential status of HUF shall be determined as per section 6 subsection 2. The whole HUF shall be treated as
resident if control and management is situated in India wholly or partially, and if not, then HUF shall be treated as non-resident. Further, if the Karta of the HUF satisfies the condition as per 6 subsection 6, then the whole HUF shall be treated as ROR. Otherwise, it is to be treated as RNOR. Then residential status of company shall be determined as per section 6 subsection 3. Indian company is always a resident, but in case of foreign company, if the POEM, that is place of effective management, is in India, then the foreign company is to be treated as a resident company. And if the POEM is outside India, then it is to be treated as non-resident. Then the next point is residential status for other SSC. It is to be noted that other SSC includes firm, LLP, association of persons, body of individuals, or SAP, are to be treated as resident if control and management is situated in India wholly or partially. Then they are resident, otherwise they are not a resident. Then the next point is scope of total income and tax incidence. Sorry, sir. In order to understand relationship between residential status and incidence, it is necessary to understand meaning of Indian income and foreign income. Indian income is that income which is received in India, deemed to be received in India, and accrued in India, and deemed to be accrued or arise in India. Then foreign income is that income which is not an Indian income, that is not received in India, not deemed to be received in India, not accrued in India, and not arise in India. Then incidence of tax for individual and HUF is as follows. Both the income, Indian income and foreign income of ROR is taxable in India. Then Indian income of RNOR is taxable in India, but foreign income of RNOR is not taxable in India, but only that income which is out of profession and business setup in India is taxable.
Your time has ended.
Yeah, one more minute, please. Indian income of non-resident is taxable, but foreign income is not taxable. Then incidence of tax for others is as follows. Both the Indian income of resident and non-resident are taxable. Foreign income of resident is taxable, but foreign income of non-resident is not taxable. That's all, sir. Thank you, sir.
Thank you. Thank you very much. Very well explained.
Thank you, sir.
May I call Subsection now, please?
Yes, sir. Hello, everyone. Today I will explain the prospectus of a company. First of all, the meaning of a prospectus. It is a formal legal document required and filed with the Securities and Exchange Commission. Provide details about an investment offering for a sale to the public. Should contain the facts that an investor needs to make an informed investment decision. Prospectus is also known as offer document. Next, the objective of a prospectus that it informs the company about the formation of a new company. It serves as a written evidence about the terms and conditions of issue of shares or debentures of a company. It induces the investor to invest in the shares and debentures of the company. It describes the nature, extent, and future prospectus of the company. Legal requirement of a prospectus that a prospectus is required to be issued only after the incorporation of a company. The prospectus must contain all the particulars listed in the Schedule 2 of the Companies Act. The prospectus must be dated. Before a prospectus is issued, a copy of it must be registered with the registration of a company.
contents of a prospectus that it must be the name, address, and occupation of directors and managing directors, the number and classes of shares and the debentures issued, the qualification shares of directors and the interest of directors for the promotion of a company. The prospectus contains the main objective of the company, the name and addresses of the signatories of the memorandum of association, and the number of shares held by them. The condition of the prospectus of issued that a prospectus must be issued more than 90 days after the date on which a copy thereof it is delivered for a registration. If a prospectus is so issued, it will be deemed to be prospectus, a copy of which has not been delivered to the registrar. There are four types of prospectus. First is a abridged prospectus, second dim prospectus, third shell prospectus, and last is a red herring prospectus. The requirements of a prospectus that prospectus must be dated, and it must includes an auditor's report on last 5 years profit and loss account and balance sheet at last date on which the accounts were prepared, being a date not more than 120 days before the date of issue of the prospectus. It must be issued, published not less than 7 or more than 30 days before the subscription date. If prospectus included a statement made by an expert, the expert must not be engaged or interested in the management of the company. A written consent of the expert should also be obtained before the issue of prospectus with the statement. It must be issued not less than 7 or not more than 30 days before the subscription date. In case of a listed company, approval of the Security Exchange Commission must be obtained within 60 days before the date of issue of prospectus. However, the commission may impose such condition as it may deem necessary. The penalty for fraudulently inducing person to invest money, that the any person who induces any other person by making a false statement to make investment in shares or debentures of a company shall be liable to imprisonment for up to the 3 years or with a fine up to rupees 20,000 or with both. Okay, thank you so much, sir.
Thank you. Very well explained. Sure. Okay, may I call Purva now?
Yes, just a minute. I'm sharing my screen.
Okay.
Sir, is my screen visible?
Yes. Please go ahead.
Good evening, sir. This is Purva.
Just a second, Purva. Just a second. Poonam, please put your mic on mute. Thank you. Purva, start.
Good evening, sir. This is Purva, and the topic which I selected to speak on is Essay 200: Overall Objectives of Independent Auditor and the Conduct of Audit in accordance with the standard of auditing. First of all, it is important to know the definition of auditing. Audit means an independent examination of financial statements with an objective to give an opinion on such financial statements. A financial statement comprises of the following components, like balance sheet, statement of P&L, cash flow, notes to accounts, receipt and payment account. Then there are 5 general responsibilities of auditor which are stated in the presentation. Further, we can see the classification of these responsibilities. First is ethical requirement. First is integrity. Auditor must maintain his integrity by being honest, sincere, and straightforward. Objectivity. Auditor's objective is to form an impartial opinion on financial statements. Independence. As per the guidance note issued by ICAI, an auditor is said to be independent if its judgments are not subordinate to the anyone's wishes or choices. Next is confidentiality. It is the major component of ethical requirement, and an auditor must possess this quality. Confidentiality cannot be leaked at any cost. skill and competency. Conduct audit carefully by using skill and competency. Next is professional skepticism. Professional skepticism refers to an attitude of having questioning mind. Then second is being alert to conditions that may indicate possible misstatements. Third is critical assessment. Critical assessment of audit evidences. Some examples of professional skepticism are missing. Some example by which auditor should know that auditors skepticism will increase, that are missing voucher, missing bills, contradictory audit evidences, etc. Next, third is professional judgment. Professional judgment means application of knowledge, skill, and experience to take appropriate decisions during the course of audit. Some examples of professional judgment are whether misstatement is material or non-material, determining nature, timing, and extent of audit procedures, etc. Next is audit evidences. Audit evidences are the information on the basis of which auditor forms his conclusion, which leads to audit opinion. Auditor must obtain sufficient and appropriate audit evidences to form this audit opinion. Audit evidences in detail is also covered in SA 500. Sufficiency is with regard to quantity, and appropriateness is with regard to quality, that is how much a person can rely on the audit evidences. Next is an auditor should conduct audit in accordance with standard of auditing. That is, auditor must apply relevant standards and some circumstances to apply that standard. That is, if standard is effective. If whole standard is not effective, then auditor can only apply that relevant portion to that standard. Then next is audit risk. Audit risk means that there may exist some undetected material misstatement even if auditor has given clear reports. Auditor can reduce this audit risks to an acceptable low level but cannot make it zero due to its inherent limitations. The inherent limitations of auditor follows. First is nature of financial report. That is, accounts itself contain many estimations because precise means of measurement are not still available. Example, provisions for doubtful debts, depreciation, etc. Then second is nature of audit procedures. That is, auditors depends on management for most of the information, and sometimes it may be possible that management may give wrong information. Next is limitation.
Purva, your time has ended.
Just a minute. Limitation due to time and cost. To complete audit within reasonable time and cost, auditor does sampling, and other factor like audit evidences are pervasive and not concise. Then auditor, the conclusion is that auditor's opinion is a reasonable assurance and not an absolute assurance. Reasonable assurance is the high degree of assurance to the users, but it is not a guarantee. And an auditor usually mostly gives reasonable assurance. Then next is absolute assurance. It is 100% guarantee, and usually an auditor never gives absolute assurance. That's it, sir.
Okay, thank you very much. So
Yes.
Now may I call Vaishnavi, please?
Yes, sir.
Please go ahead.
My topic is goods and service tax. GST is direct tax. What is mean by taxes? Taxes is nothing but money that people have to pay to the government, which is used to provide public services. Example, street light, roads, vaccine, etc. There is two types of taxes: direct tax and direct tax means direct tax is a kind of charge which is imposed directly on the taxpayer and paid directly to the government by the person. For example, income tax and indirect tax. There is two types of indirect tax. First is GST and second is custom duty. And indirect tax is a tax that levied upon goods and services before they reach the customer, who ultimately pays the indirect tax as a part of market price of the good or service purchase. In short, direct tax means person pays tax from own pocket, and indirect tax means person collects tax from customer, pays to government. Introduction is GST. GST shows a one nation, one tax. GST passed in Parliament on 29th March 2017 and came in 1st July 2017. In India, first state Assam applied GST on 12 August 2016. France was the first country to implement the GST in 1954. Asim Dasgupta designed a GST model. Features of GST: an important source of revenue. Indirect tax contribute more than 50% of total tax revenue of central, state, and government. Tax and commodities and services. It is levied on commodities at the time of supply or manufacture or purchase or sale, import, export. It is also levied supply of services. Regressive in nature. Generally, the indirect taxes are regressive in nature. The rich and poor have to pay same rate of indirect taxes on certain commodities of mass consumption. GST has replaced multiple indirect taxes like excise duty, service tax, VAT, luxury tax, entertainment tax, etc. There is two small terms of GST: interstate transaction and intrastate transaction. Interstate means between two states, and intrastate means between this state itself. To increase the taxpayer base, GST has helped in widening the tax base in India. Online procedure for ease of doing business. Previously, taxpayers face a lot of hardship dealing with different tax authorities under tax law. Besides, return filing was online. Most of the assessment and refund procedures took place offline. Now, GST procedures are carried out almost entirely online. Everything is done with a click of button. What are the components of GST? CGST, SGST, and IGST. CGST, it is the tax collected by the central government on an intrastate taxation within Maharashtra. SGST, tax collected by the state government on intrastate sale, for example, within Maharashtra. And IGST, it is collected by the central government for an interstate, Maharashtra to Tamil Nadu, etc. There is also non-GST goods, for example, grains, salt, jaggery, bread, fruits, milk, curd, alcohol. There is small term is GST number. GST number means goods and service tax identification number. This number is 15 digits. 2 digits represent the state code. Remaining 10 number is PAN number. 13th number based on the number of registration done by the firm, and 14 and 15 digit will be the alphabet by the default. That's it, sir. Thank you.
Thank you. Thank you very much. Okay. May I call the next speaker, Prajakta?
Yes, sir.
Please go ahead.
Hello, everyone. I am Prajakta Akodkar. I am going to speak on the corporate law, that is Company Act 2013. A Company Act 2013 is an act of Parliament of India on Indian company law, which regulate incorporation of company, responsibility of company, director, dissolution of company. The Companies Act 2013 is divided into 29 chapters containing 470 sections and 7 schedules. Currently, there are only 438 sections remaining in the Company Act 2013. The Company Act 2013 was introduced to ease the process of doing business in the India, and inspiring the corporate government. There are different types of company, like public company, private company, company limited by shares, company limited by guarantee, one person company, social proprietorship, partnership. Now let me start with the chapters of the company. The first chapter of the company is the preliminary section, which defines all the section of the company. It is also known as definition section. The chapter 2 is incorporation section. It tells about incorporation of company, documentation, and the document required for the incorporation. Memorandum of company, article of association are also important documents which are required to be filled with ROC. Alteration in MOA and AOE, AOA are also required to take prior permission of government, central government. It also states that the one-person company and non-profit organization, its formation and the document required for it. Chapter 3, Prospectus. It states the different type of prospectus like deemed prospectus, self-prospectus, red herring prospectus, and abridged prospectus. It also required the prospectus to be filled with ROC and the document to be filled with it. The prior permission of the ROC is also required before filing the prospectus to the public. Chapter 4. It brings light to all the share like preference share, equity with differential voting right, sweat equity. Then it also tell about the buyback, bonus and bonus issue and right issue. Chapter 5 deals with the deposit. The deposit to be called from the public required has a particular limit for the different company. It states the number of deposit to be called from the public, its member and director. There are some loans and advances which are not to be included in the deposit. Chapter 6, duty to register charge. It is a duty of charge holder to register the charge on the asset which is on the asset.
Hello, Prajakta.
With the register the charge with the company. Satisfied, the charge holder has to inform it up to the registrar. Chapter 7 state about register of member, debenture holder, beneficial owner, annual return to be filled, notice of meeting, quorum, chairman, ordinary resolution, special resolution, and everything required to the daily activities required in the daily activities of the company. Chapter 8 state the declaration of dividend consists of two types of dividend: interim dividend and final dividend. Both the dividend are to be paid during the year, and the sources to be paid to pay this dividend. Chapter 9 tell about the accounts to be kept with public, and when they are open, for the number of years they are to be kept open, and the storage of these accounts. Chapter 10 deal with the auditor.
Rajasthan, your time has ended.
Am I audible?
Yes, you have to conclude. Your time is ending, please.
Okay. Chapter just a minute, sir. Chapter 10 deals with auditor, its responsibility, director, their responsibility, in remuneration to be paid to director, and the duties and power of the director. And that's it. These are the 10 chapter of companies act which are taught at the inter level. Thank you, sir.
Thank you. Thank you very much. Very well explained. May I call Mr. Kishan now? Kishan, are you there?
Yes, sir.
Please go ahead.
Today I'll be providing you an insight or overview of the head capital gain. So as every head of tax has their own charging section, capital gain has its own. That is 45 subsection 1. Okay, so now we'll go with the charging section, which says any profit and gain arising from transfer of capital asset shall be chargeable under the head capital gain in the previous year in which such transfer took place. What do we get from this charging section? That whatever in whatever year we transfer a asset, that will be taxable in that year only, and we have to pay the tax on that transfer in the assessment year in which such transfer took place. In short, capital gain is equals to capital asset plus transfer. So now we'll break up the definition and see the definition of what is capital asset and what is transfer. So as for capital asset, what does capital asset means? Property of any kind, whether it is movable, immovable, personal, commercial, tangible, intangible, held by an assessee, whether or not connected with his business. If any assessee holds any property, even that property, if it is not connected with assessee's business, if they sold it, there will be a capital gain arising on that sale. Okay, so and now with foreign institutional investor, if they held any securities along with them, that will not be treated as stock in trade for them, that will be treated as a capital asset, and if they sold it, they have to pay tax on that. So, and now we have seen the definition of capital asset. Now we'll be seeing the definition of what does transfer means. Transfer means sale, exchange, or relinquishment of asset, or any extinguishment of right in any asset. Compulsory acquisition by any law under and redemption of zero coupon bond, then part performance of the contract and transaction which have the effect of transferring or enabling the right in immovable property. If your transaction falls in under any category of these following notified transactions, then you'll have to pay capital gain on that transaction. Now, what is capital gain? Now, capital gain is of two types, that is short-term capital gain and long-term capital gain. If you sell any short-term capital asset, it will come under short-term capital gain, and if you sell any long-term capital asset, your gain will be taxable under long-term capital gain. So does government provide any methods or any steps that how do we calculate our capital gain? Yes, government does provide. Government provide two ways to calculate our capital gain. First one is in section 48 and the second one of that is in section 50. How do we calculate the capital gain in section 48? First, whatever we have received after selling our asset, that will be called as full value of consideration, and then government allows us to deduct any transfer fees that we have paid during the sale of our asset, and then we arrive at our net value of consideration. Then government has also provided us the power to deduct some cost of acquisition that we have paid during the acquisition of asset, or any cost of improvement that we have incurred during the life of the asset that we had in our hand up until now. Okay, so what about and we can also deduct index cost of acquisition and index cost of improvement. What is indexation? Indexation benefit only allows only we get in the sale of long-term capital asset. What does indexation do? Indexation converts the value of money at that time in today's time. How do we calculate indexation? At the time of indexation, we have to multiply the cost of acquisition or cost of improvement to the CII of transfer year and divide it by CII of acquisition year. What does CII means? Cost inflation index number. It is released by government every year. So now we'll move on to section 50. How do we calculate the second part of how do we calculate the capital gain? It is on depreciable asset. How do we calculate capital gain on depreciable asset? First, we have to take a whole WDV, opening WDV of the block of asset. Block of asset means same rate of assets plus same class of assets that we will learn in business head. Okay, so we'll take opening WDV of block of asset, then we'll add any purchase or any asset that we have acquired during the year, and we'll less any sale or any transfer of asset that we have sold during the year. If the amount column is positive and the number of assets column is also positive, then there will be no capital gain will be arising on that transfer. If the number of column asset column, the number of assets that we have is positive and the amount column is negative, there will be always a short-term capital gain arising on that transaction.
Kishan, your time has ended.
Just a minute. So as for now, as the government, does government also provide us some exemption during in the capital asset? Yes, government does provide us exemption during under the capital gain head. Government provides some exemption in the section 54. There are 6 types of exemptions: 54E, 54F, 54EE, 54EC, EB, and some more. What is the condition for availing these conditions? You have to fulfill some conditions that is notified by the government, then you can avail these conditions. Even if you don't fulfill this condition, there is a scheme that government have launched known as deposit scheme. You can deposit this, you can deposit your capital gain money in this deposit scheme and utilize this money for the certain use that government has notified in the future also. If you do not utilize this money for the same reason that you have deposited this money in the deposit scheme, then you will have to pay the capital gain on that money, and that will be treated as short-term capital gain. Now, as for the rate of taxes, the government has provided 3 sections: 111A, 112, 112A. As for 111A, short-term capital gain will be taxable at flat 15%, and as for 112A, the capital gain will be long-term capital gain will be taxable at the rate 10% in the excess of 1 lakh. If your amount is less than 1 lakh, it will not be taxable. Now, as per 112, any capital gain other than 112A will be taxable at 10% or 20%, whatever it will be at your disclosure, whatever you opt. But at 10%, you'll not get indexation benefit, and 20% you'll get indexation benefit. And as per short-term capital other than 111A, you will have to pay tax on that according to the slab rates defined by the government, which is released by government in every year's budget. Thank you. That will be the overview of capital gain.
Okay, thank you very much, and very well explained with confidence. That was good.
Thank you, sir.
Okay, so guys, we have finished 33 presentations. So how's the Josh?
Hi, sir.
Hi,
sir.
Hi, sir. Hi,
Sure.
sir.
That's great. So we'll take a 15 minutes break and then continue. Is it okay?
Yes, sir.
Yes, sir.
Yes, sir.
Yes,
sir. So 15 minutes and we are back. So it is 5:23. 15 minutes, that will make it 5:38. We are meeting at 5:40. Okay?
Okay,
Yes,
sir.
sir.
Yes, sir.
Yes, sir.
Thank you. Bye-bye.